yields simply explode, except they've been exploding all week. 10-year yield out 11 beeps, 0.93. You may see a 1% 10-year yield today, or if this interpretation continues, in the not too distant future. Curve steepening out to a solid 70 basis points. That's a completely different statement of the yield curve market than what we saw 5 and indeed 10 days ago. Gold plunges below 1,700. It's broken a key level down $43. 2.5% to $16.84 an ounce. Oil, a little bit of its own story, $42 on Brent crude today. Edward Morse of Citigroup in the 4 o'clock hour today. And then finally, I want to go to dollar dynamics, which is for a better America with these better statistics, a stronger dollar. Someone who's had a modest luxury of 12 minutes to interpret this is our chief international economic correspondent, Michael McKee. Michael, you and I know Scott Landman, who has a real job, unlike me. And I went to Scott Landman moments ago and I said, is there an appendix that explains all this? The BLS is really good at that. Michael McKee, is there an appendix?
There's not an appendix that explains why there were so many jobs created when we expected so many losses. There are explanations for some of the statistical variations. The BLS comes into this saying that we're still misclassifying workers in the household survey. They're supposed to be considered absent from work, but on payrolls instead, they're not counted, and so therefore the overall labor force doesn't rise as much. And they say if they had been properly classified, unemployment would be 16.3%. But it would still be a very low number compared to what we were expecting. As long as I'm talking unemployment, Tom, let me give you a couple other numbers here. White unemployment falls from 14.2 to 12.4. Hispanic unemployment falls from 18.9 to 17.6. Those are still huge numbers. And the disappointing numbers, given the context of where we have been this past week, black unemployment rises to 16.8% from 16.7%. I hate to pivot to some good news in a way, but aggregate hours worked is sometimes seen as a proxy for GDP, and they rose significantly from 93.3 to 97.3, which will have economists scratching their heads, but also going back in and maybe refiguring some of their forecasts for GDP, because May was supposed to be the worst month, April, May, and if aggregate hours are trending higher, then that would be good news for total output.
Mike, I hope that this report reflects a real surge in strength and optimism that perhaps hasn't been reflected in some of the economic reports and expectations. I still am struggling to understand, Mike, the lack of coherence with the continuing claims and the initial jobless claims that we got out of states and federal governments over the past 4 weeks, and how that relates to what we're seeing in this report.
We're all struggling with that, Lisa. You know, I went to Twitter where all the experts are going to opine, and the basic message from Twitter is, well, we don't know. Everybody's going to be trying to figure out what happened here. Restaurants closed by the thousands everywhere. And even in a few states where they started to reopen, they weren't full. People were standing outside or sitting outside. But leisure and hospitality hiring went up by 1,239,000 from a loss of 7.5 million the month before. So where did all those people come back to? And the suspicion is going to be that it was the payroll protection plan, that people went back onto payrolls. And the question is, because at the moment you have to keep them on for 8 weeks, that was the limit. And are they going to start getting let go again? That's going to be an issue. Is this a high and then we fall off again? That's going to be a key question as you go forward and trying to figure out what's going on here. We did see department stores announce that they were going to be bringing back workers during the month, and we saw retailers rise by 368,000. That might be a little more stable, but it's really going to depend on whether people or not go shopping. So this tells us things were better than we thought, but I don't know how much it tells us about how good it's going to be going forward.
Well, Michael McKee, your reporting at 8:30 was absolutely extraordinary. Michael McKee, with decades of experience there, our chief international economics correspondent, just absolutely stunning. You know, Lisa, I look at where we are in the humility of this game of data there's a thing called 1 over the square root of n, which they pound into you in statistics. And what it basically says is you better have some humility at all times in any place. That's really been a hallmark of this show for decades. And more than any other moment I can think of within economics, this morning in this jobs report is something that brings on humility.
I would agree with that. I also think there is a huge challenge when the labor market and the economy is moving this fast, when it is this hard to pinpoint what actually is going on the ground, that usually the numbers don't lie, and yet the numbers are being cast into question, and it becomes highly political. You'll have some people saying, all of you who are gloom and doom, this proves you're wrong, and then you're going to have other people saying, can we trust these numbers? And Tom, these dueling narratives will be driving the conversation going forward.
Well, there's no question. I mean, we're going to have to see how that goes. But you know, I think Lisa, all in all, when I look at this, and this was touched on by Jonathan and by Michael as well, is even though it's a better report, it still signals a very, very difficult economics. And as Jeff Rosenberg said, the distributional and demographic shifts are tangible.
President Trump going to be speaking at the White House, we're learning, at 10 a.m. Wall Street time about this jobs report. It'll be interesting. Again, Tom, I have to think that this becomes political. This becomes a question of, has the government effectively staved off the pain that could have been had they not acted as quickly as they have? We have been seeing futures ripping higher ahead of the open on the back of this report. Yields as well. Gina Martin-Adams, Chief U.S. Equity Strategist with Bloomberg Intelligence, joining us now. Gina, my first reaction when futures did move higher was why they didn't move even more higher, given the fact that this is a massive upside surprise. What was your initial take by the equity market's response?
I think the equity market is responding appropriately. It's one number. It doesn't mean everything to the outlook, but it is a better than expected number, consistent with a trend rate of improvement, or at least less bad data that we've been getting for about a month now. Pretty consistently, we're seeing confidence or more confident data to suggest that April was likely the low for most economic data series. Despite the fact that we were shut down for at least part of May, the recovery process in the latter part of May does appear to be lifting some of the data somewhat, and that's largely what the market has been trading on for the last several months. I mean, don't forget the equity market made its low in March, anticipating that we would start to see some green shoots in the economic data come May, June, July, and we're seeing that. So it's a confirmation of what the equity market has been trading on.
Lisa, short on time, Gina, it's about the same. Gina, short on time, and I'll be direct here. What does the higher yield structure and steepness mean for the banks? Is this a time where the banks get on fire and go, go, go?
It should be, as long as the yield curve is becoming more upward sloping, as long as you see an environment for cyclical improvement, as long as you see lesser chances for bankruptcies sort of pressing their way through the system, the financial sector is extraordinarily undervalued. I mean, it's certainly one of the cheapest sectors in the U.S. and globally extraordinarily cheap relative to the rest of the sectors, trading at incredibly suppressed price-to-book ratios. And that's largely because of anticipated bankruptcy risk. And it's a lot of concern that we would see this economic recession last for a significant period of time, which would weigh on the financial sector. So it's not all about yields. It is about reducing bankruptcy risk as economies start to recover. But it certainly doesn't hurt that the yield curve spread is widening and has been widening, confirming a better outlook emerging for the last several months.
Very good. Just thank you so much, Gina Martin-Adams. Greatly appreciated. This has been an extraordinary day, folks. I think there'll be a lot of analysis about this shock of better numbers. One person weighing in, as you can well expect, like any other president would do the same thing, is the President of the United States. This is a, quote, amazing jobs report, all caps. Of course, the president speaking at 10 a.m. Even better, before the president speaks at 10 a.m., scheduled to speak with our Jonathan Farrell, will be his National Economic Advisor, Lawrence Kudlow. I think that will be a positive report as well. We need to thank all of our guests. It has been just an extraordinary Bloomberg surveillance this morning. Stay with us. More ahead on Bloomberg Television and Bloomberg Radio.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
The Dow and the S&P.
Shall we? So the euro on a 7-day winning
Sizable
streak.
moves in the currency market, averages down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange
China's
rate.
slumping onshore bond market is bringing
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now on this Payrolls Friday. Good morning to you all. Here is the morning price action off the back of a massive upside surprise. Your equity market higher by 50 points on the S&P 500. We advanced by 1.61%. These cyclical parts of this market running through the week, and we add some weight to that 30 minutes out from the opening bell. In the bond market, Treasury yields higher, the curve steeper, Treasuries lower. 8 basis points higher on a 10-year yield to 0.9%. And in foreign exchange, after being weaker against the euro over the previous 8 days, euro dollar comes in 0.4%. That is a weaker euro and a stronger dollar. That's your price action. Here is the top story. The biggest upside surprise we have ever witnessed following the worst payrolls report we've ever seen in history. It is shocking for all the right reasons. And for the millions without a job, we can only hope that this is a sign of improvement still to come. To weigh in He was lost for words 30 minutes ago. I think he might be lost for words right now. Bloomberg's Michael McKee is back with us. Mike, what was behind this shocking report? And I say shocking for all the right reasons.
Well, we really don't know, John. There are a number of explanations for minor parts of this, but nobody has a clue as to why the number came in so much better than anybody anticipated. The difference between you and me is I was on camera. You saw my jaw hit the floor, but I'm sure yours did as well, because we gained 2.5 million jobs, and the estimate was that we would lose 7.5 million. The unemployment rate fell to 13.3%. There are some caveats there. Again, the BLS says that we have misclassified some workers in that household survey, and with proper classification, unemployment would be 16.3%, but that's still better than the anticipated numbers. So as you can see there, a very good report overall that suggests maybe we're starting to see some improvement. The caveats to that are, of course, a lot of this may have to do with the PPP program. And in its statement today, the Bureau of Labor Statistics said the improvements in the labor market reflected a limited response, a limited resumption of economic activity that had been curtailed in March and April due to the coronavirus pandemic and efforts to contain it. The efforts to contain it may be the key there. The Paycheck Protection Program, which did get out to a lot of companies, may have incented people to put people back on their payrolls. And we see that perhaps most definitely in the leisure and hospitality space, particularly restaurants. Restaurant employment went up by 1,370,600 people. Now, I don't know about you. We live in New York where everything is closed, but even around the rest of the country, did that many restaurants reopen? Did that many people go to work? Or were they just on payrolls and not working? And after the 8 weeks of PPP run out, do they fall off? That's going to be a key question going forward. Also, this is from the beginning of May. The first 2 weeks of May, we saw a lot of people on the initial jobless claims rolls after that. Do they get added onto this later, or is this just a sign that the U.S. economy is so resilient? 2 points I want to make here, John. Black unemployment did rise during the month to 16.8% from 16.7%, important in the context of what we have seen over the last 10 days or so, while white unemployment and Hispanic unemployment fell. Aggregate hours, something we don't normally talk about, but is something of a proxy for GDP. Economists are going to be looking at this because it went way up from 93.3 to 97.3. And of course, we have horrible second quarter GDP forecasts. Maybe this will cause people to change those a little bit, to tweak them upwards some. So a lot to unpack in this report, and a lot of people trying to do so, but nobody with a good overall answer other than the U.S. economy may be more resilient than any of us expected.
Fair to say very few people saw this one coming. Some good news finally on a really, really tough week for this country. Bloomberg's Michael McKee, thank you very much. We'll be catching up with the administration a little bit later. 10 a.m. Eastern, you will hear from the President of the United States in a news conference. A little after that, a scheduled change. We'll be catching up with Larry Kudlow, the National Economic Council Director, to get the White House reaction right here first on Bloomberg. Hardly anybody saw this coming. How on earth do you process such a massive upside surprise? I'm pleased to say that we can start this Payrolls Friday with Mohammed El-Arian of Bloomberg Opinion. Mohammed, let's go back to the days of PIMCO. You're on the investor committee, you're leading the firm, you're sitting around the table, and this one drops across the Bloomberg terminal. What on earth do you say? What on earth do you do?
First, I would say I don't know why this has happened. I would be exactly like Mike McKee. I would be putting out different hypotheses. It could be that growth has really picked up and employment has really picked up, but that is inconsistent with virtually every single other data point we have, including continuing claims. Or it could be data compilation issues or the impact of government policies. Having said that, I would say what matters is what the market sees. And the market has taken this as confirmation of the better growth hypotheses. We're seeing major moves across the board. Look what's happening, not just in stock futures, but the yield curve. The front end of the yield curve is moving as well as the long end, which has been the story of the bear steepener. So, the markets are not waiting. They are taking this as confirmation of them being ahead of everybody else, and that growth is picking up in the U.S. economy, and the worst is not just behind us, but this looks more like a V. I have my doubts, but you've got to respect how the market sees it.
Well, Mohammed, let's talk about how the economist in you sees things. As you've pointed out, hardly any of the data points confirm this improvement. The survey week was ending the middle of May. Hardly anything could reopen, and yet we see this substantial improvement. I do want to talk about risks, and I don't want to get away with the happy talk too much. We're all encouraged by this, and we hope it continues in a big way. We all do, sincerely. The risk of extrapolating this improvement out too far, too quickly. Can you speak to that, Mohammed?
So the risk is that this is an aberration and that the economy isn't picking up that quickly and that the recovery will be more like a check mark, long and slow, as opposed to a sharp V. That's the first major risk. The second major risk is that this may encourage the Fed to be less supportive of markets. Already the markets were sensing that a little bit in the Treasury market, and you saw what's been happening to treasuries. There was this notion that treasuries are no longer a good hedge, that if you really want to hedge yourself, you should go to short-dated corporates. If to the extent that the Fed feels that its job is done, that is the second risk. And then the third risk is that the urgency for stimulus goes out the window. The people think you don't need any more relief. The market is doing the heavy lifting for you. The economy is doing the heavy lifting for you. Governments no longer need to worry about relief or stimulus. Those are the three risks, and I think we have to monitor them. But, John, it's important to stress that we don't have a good explanation for this jobs report.
And we might not get one for a number of weeks still to come, Mohammed. We hope the data points to come confirm the improvement and confirm the big improvement we see in this jobs report. Mohammed, week after week, we've caught up every single Friday. You've preached quality and you've preached safety for quite a long time now. This market is getting ahead of where you've been for a number of weeks. And I just wonder what it would take from your personal standpoint, and I ask this diplomatically, to change your mind on how quickly we could recover, how quickly we could normalize.
So, John, I keep on saying I'm really glad I'm not managing other people's money, because if I'm managing other people's money, I would be completely torn between buying into the growth hypothesis and buying into the Fed moral hazard trade versus the reality of fundamentals and the reality of valuations. And that is some place that I don't want to be. For me, as a personal investor, and I stress, other people may feel differently. I don't like betting on what I don't understand, and I certainly don't like betting on moral hazard. So for me, having been cautious going into the sell-off, having benefited from the high-quality trade that actually they outpaced the market. People don't realize that for most of the rally, the names with strong balance sheet, positive cash flows, and on the sunny side of both the at-home and the economy and back-to-work economy, they actually did better than the indices. I've reduced my tactical exposures completely. I've eliminated my tactical exposures, and I'm sitting on the sideline. I hope that the markets continue to go up, but I really don't understand what's driving all this. And this latest data point is as confusing to me as it is to other people.
What would it take for you to put more capital to work, Mohammed? What are the signposts that you're looking for on the road ahead?
That in 2 weeks' time, we find out that the infection rate has not gone up, that it's come down, that the hospitalization rates have come down, and that we find out that we are much more resilient to this virus than most doctors tell us we are.
Mohammed, we appreciate your honesty and your transparency over the last several weeks, and especially getting your thoughts on a day where we get a massive improvement, a huge upside surprise from this jobs report. Shocking, as I've said multiple times in the last hour, for all the right reasons. Mohammed Al-Erin there of Bloomberg Opinion and of Allianz. Coming up on this program, we'll catch up with Rick Reeder of BlackRock and get more reaction right here on Bloomberg TV on this really impressive payrolls report, and count you down to an address from the President of the United States. A difficult week for the country, and hopefully we're starting to see some real signs of improvement for this labour market and the broader economy. From New York City this morning, good morning, with futures aggressively higher. This is Bloomberg.
David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I see a V-shaped recovery because that's what the markets are telling us. If you look at every market around the world, they've gone up by 20, 30% or so. And I'm talking about both emerging and developed markets. So I think a V-shaped recovery is in store for us, actually. What we're hearing from companies around the world is that once the lockdown is over, they're going to get customers coming back in droves.
Mark Mobius weighing in on a V-shaped recovery. We don't see a V-shaped recovery in the economy. We see one in the market. We see a drastic improvement in this payrolls report, a huge upside surprise for the jobs report for the month of May, shocking everyone for all the right reasons. I'm going to repeat that every single segment for the next hour or so. Pleased to say that we get more commentary now, more insight, more perspective from Rick Reeder of BlackRock. Rick, always great to catch up with you, sir. Your reaction from 45 minutes ago, please. Just how did you react when you saw that number roll across the Bloomberg terminal?
I think it takes more than 45 minutes to actually to assimilate all of what it's telling you, but it's pretty remarkable. I mean, we had some sense that the economy was improving. You see it in all the high frequency data we look at, from some of the industrial data to the trucking data, et cetera. But this just shows you the economy's coming back faster on an employment basis that anybody could have anticipated. And particularly when you see leisure and when you see what's happening in what falls into that in restaurants, et cetera. I mean, that you have a sense that it was going to come back, but pretty powerful in terms of how quickly the rehire is taking place.
Well, Rick, that was what it was always going to come down to as we reopen, not just the direction of travel, but the rate of change, how quickly we improve. Mohammed and I were talking about this, just knocking it around 10 minutes or so ago, how quickly we can keep this rate of change up, how long we can keep doing this month on month on month on month. Do you see it in two speeds, in two stages? Do you see it as a seamless journey? How do you frame it right now?
Yeah, it's a great question. Well, first of all, I mean, like I said, I think I think you have to anticipate the economy was going to come back quicker, particularly with some of the better numbers around the virus. That being said, I think you made a great point. By the way, markets tend to anticipate faster than the thinks about their impact on long and variable lags. Well, the market doesn't think that way. It thinks in where we're going. Listen, I think this is moving the speed up a bit faster, but we've been pretty enthusiastic. The data is impressive, and what you'll see is this restocking that's taking place, which will be beneficial for pricing power. You'll see that in some of the inflation numbers that'll start to be better as you get the inventory, and not just inventory destocking, but now you're going to get an inventory rebuild. So I do think you're going to get better numbers persistently, but maybe this is a bit faster than I would have even thought. It means next couple of months you won't see that rate of acceleration of employment you otherwise thought you would have, but the data is going to continue to be pretty solid, we think.
Well, Rick, every day that goes by without another pickup in infections as this economy continues to reopen, people will have more confidence to go into the riskier parts of this market, the more cyclical parts of this market. How do you maintain discipline in a moment like this one, Rick?
So that is a great question. I mean, we've been on your show talking about it for a while now about, you got to run balance in your portfolio, but take some equity risk. And, now as the markets are running up so much, there's some other ways you think about it that, gosh, don't put all your eggs in one basket. I do think the equity market will continue to go higher. The cash is too high. People have missed it to some extent. And pension funds and endowments, et cetera, have no choice because rates are so low. So we'll keep grinding up. But I think you got to think about other expressions around the world. And Jonathan, I've been on your show for I don't know how many years. We've talked about Europe. That we haven't seen a catalyzing event in Europe that would promote the ability to buy equities because we've been in this negative rates, and all of a sudden fiscal stimulus, Eurozone recovery. I actually think diversifying globally makes some sense now. And for the first time in a really long time, you're actually getting the appropriate policy in Europe, which means you can actually take some of these expressions in other parts of the world and not just bet on the U.S. recovery.
Well, Rick, we're hearing the right things from Europe. I just wonder if they follow through in a real way in the next coming months, the next year or so. There is a big difference, though, between a tactical trade to go out into Europe and pick up on that cyclical theme, where Europe is considered to be a deep cyclical and something much more sustainable than that. Which one is it at the moment for you?
So I agree. So I don't think you're going to see rip-roaring growth in Europe, but I do think when you look at some of these markets, Jonathan, in Europe and how the markets have really gotten hurt, and if you said, and particularly in places like Italy or Italy and some of the other Spain, et cetera, that if you said, gosh, you were going to have, if you went back and said, where should the markets be today relative to where we were 3 or 4 months ago? Well, if I told you, gosh, we're going to have a virus that's going to shut down the economy for a while, but it's going to lead to maybe some fiscal and maybe some structural change. How much should the markets be down? And I would argue that actually you may arguably be in a somewhat better spot from a market's point of view. So I don't think you're going to be, I think it's, as you said, more in a tactical, gosh, the markets have really gotten hurt. You should retrace some of that. You've got a better structural dynamic than it is, gosh, I'm expecting tremendous growth in Europe because you don't have, as we talked about, the technology drivers and some of the other drivers that create real growth in the region.
Rick, let's talk about the fixed income side of things and move away from equity just for a moment. Just a phenomenal number in this market that's going to give a lot of people some confidence about the recovery. And we all hope it continues on this trajectory, though I understand that many people watching will have their doubts quite naturally. You've made the argument in the last week that risk-reward still favors the medium and high-quality spread. Is that still the argument for you at the moment?
Yeah, I mean, I still love. I think you're going to have a high default rate in the over the next few months, and I think you'll still see the weaker parts of the economy that still are too levered and can't experience that bounce back. That being said, middle quality income, we've talked a lot about that in places in high yield, and it's very hard to say whether they're rated today as opposed to what sector they're in. But that middle quality income and spreads. Gosh, there's not enough yield in the world, Jonathan. Even if you get a few more basis points on treasuries, it's still nothing. That I still think that's, as you talked about, equities have run up a lot. I still like buying that income, and particularly, to outperform treasuries and other risk-free rates. So, yeah, no, I'm still there. Can you go a little bit further into some of the riskier parts of that market? I think so, and not just in high yield, but some of the securitized asset classes. Particularly after a number like this, it gives you some sense the economy's bouncing back a bit faster.
Rick, I wanted to wrap things up by talking about that Amazon issue that came out earlier this week, because it was absolutely phenomenal to see that 3-year paper at 40 basis points. That's what got the headlines. What I thought was more interesting was what happened further down the curve. To see a company like Amazon in the tech sector price 10, 20, 30, 40-year debt, 40-year paper. Rick, talk to me about the longer end of the curve and the risk being taken with some of these companies that are safe right now, where the short-term paper and where it's priced might make sense, but the risk going further out, further down the curve.
Yeah, John, you always tend to highlight the important things. So Amazon to me was an incredible cathartic moment where they were able to price. I mean, the 3-year came at 40 basis points. Funding a technology company, by the way, it's one of the interesting points in time where everybody can get a deal, meaning that spread is pretty reasonable relative to the treasury, and particularly longer on the curve, as you say. Funding some of these levels are pretty aggressive. Longer on the yield curve, you're getting levels now that are starting to be pretty interesting, and I think you'll see particularly pension buying at some of these yield levels. But I think, quite frankly, funding some companies 5 years in at levels that are less than 0.5% or 50, 60 basis points. You think about, I'm an investor. If you're thinking about investing, how much return are you going to generate from that? Whereas you can buy their equity and we've got free cash flow generation that is significant. So I think when you think about balance in a portfolio, I thought that deal, when I looked at it and I said 40 basis points, it seems on particularly 3 years, it hit me. And I looked at it, I said, oh my God. But then I thought, actually, it's not bad. If you're just a credit investor, you can hedge the interest rate duration. So, but it gives you an exactly perfect viewpoint on where we are today. And by the way, that the Fed is going to keep rates reasonably low for a while. And, the benefit to where you can take advantage of that in spreads and risk assets.
The story of Amazon, 10 years ago, junk credit, 10 years later, just goes to show a decade is a long, long time in the world of technology and in markets too. Rick, fantastic to catch up with you on a really positive morning for this labour market. At the aggregate level, some disparity, some really important disparity that we'll talk about a little bit later in the programme, which reflects some of the social unrest through this week. A lot of people would come on this programme and say, it's just a single data point, it's just a single number. I don't hear many people saying that about that jobs report this morning. A monster upside surprise following the worst labour market report we've ever seen. And the hope naturally is that this can continue. The hope also that the collective will in Washington and for global policymakers does not fade because of one jobs report. In this market, 7 minutes away from the opening bell with equity futures up 66 points. We advanced a little more than 2 percentage points from New York this morning. It's a good morning. This is Bloomberg.
Order filled. Order submitted.
From New York City this morning, good morning. With about 5 minutes to go until the opening bell, equity futures session highs up 63 points on the S&P. We advanced by 2 percentage points. That's your price action off the back of a monster upside surprise in the jobs report. Here are your morning calls from the analyst community this morning. First up, Piper Sandler naming Broadcom its top large cap pick with a 360 price target. The analyst saying it's extremely well positioned for the next 12 to 24 months. Your second call, BMO downgrading eBay to market perform with a $52 price target. The analyst signing a more balanced risk reward with an increasingly challenging backdrop. And your third and final call comes from Evercore upgrading Toll Brothers to outperform a $39 price target. The analyst citing the home builder's strong cost control plan and data indicating rising demand for high-end housing. From New York City, 2 months of historic payrolls reports. The first for all the wrong reasons, the one this morning for all the right ones. More analysis and coverage coming up right here on Bloomberg. Next up, the opening bell and Anastasia Amoroso of JP Morgan Asset Management. This is Bloomberg.
Order filled. canceled. Order canceled.
Los que hayamos adoptado un abuelito, vamos a continuar viéndolos a nuestros abuelitos, ¿no? No podemos dejarlos de verlos. Por el hecho que se termine de solucionar la pandemia, más bien al contrario, habremos tenido un mayor contacto con nuestros abuelitos hasta sus últimos días.
Order canceled.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and
Order
natural
canceled.
gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across
Order
23
canceled.
traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil.
One of the biggest positive surprises we've ever seen. The median estimate negative 7.5 million. The result positive 2.5 million. The payrolls report whipsawing a lot of people's views about this labour market in just one fell swoop, one single data point. In the market right now, equity futures higher are going into the cash open. Equity futures positive 60 points, up 1.9%. In the bond market, treasuries lower, the yield curve steeper, yields higher. Your 10-year yield 0.91%, up 8 basis points on a session. Interesting to see some dollar strength come back in against the euro off the back of this, though it phased just a little bit. Euro dollar negative, just a couple of tenths of 1%. A huge cyclical tilt to the rally over the last couple of weeks, and I imagine it will continue through this morning. Let's get to the market desk. Here is Kelly Lights.
Well, John, I want to highlight one stock this morning that is not participating in the rally, and that is Slack. Remember, of course, for Slack, we expected this huge work-from-home boost for the company. Yeah, maybe not so much. In its earnings report after the bell yesterday, it withdrew its billings forecast for the full year, citing business uncertainty, and it only just slightly raised the revenue guidance and gave back in mid-March. It signals the company isn't too confident it's going to benefit as much from that work-from-home trend as the market thought. The stock is down about 15% at the open as a result. One stock moving higher, though, is Tiffany. It's up by about 8%. All of that LVMH drama may have reached a happy conclusion. Reuters reporting this morning that LVMH is backing down on seeking to renegotiate the terms for that $16 billion purchase, keeping that bid price. That is lifting Tiffany this morning. You also have Occidental higher by some 17%, now helped, of course, by the rebound in oil prices. But you also have an analyst over at KeyBank Markets saying that the company's new change in control severance plan for its executives could signal and renew speculation about a potential sale of the company, which, of course, Carl Icahn is the #2 holder of. That stock is higher for a fifth day. And finally, John, take a look at Hertz, up 90% this morning. Huge move. It's all about optimism for that recovery in travel demand. Of course, we got that update from American Airlines yesterday about more appetite for air travel. Hertz gets about 80% of its revenue from bundled airline trips. But people buying the stock today, of course, taking a big risk, John. They've already filed for Chapter 11, and they would have to repay all debt before shareholders could actually get anything. But so it's risky, but I want to talk about how risky this market is broadly. It continues to climb higher. The S&P 500 is now up some 40% from its lows in late March, and that has taken valuations to their highest in 2 decades. The S&P 500 trading at a PE multiple of near 25, John. That is the highest ratio of price to earnings since the year 2000. Stocks are very, very expensive at this point, John.
Kelly Lights, thank you very much. The equity market with a lift up 2 percentage points on the S&P 500. 2.5 minutes into the session, the Nasdaq is where your underperformance is. Unsurprisingly, the Nasdaq up by just 0.9%. A broad risk-on tone off the back of a fantastic payrolls report that hardly anybody, if anybody, actually saw coming. I'm pleased to say that joining us now is Anastasia Amoroso of JP Morgan Asset Management. Anastasia, it's a tough one because we are emotionally constrained. We want to believe that this can continue because the numbers benefit so many people if it does continue. What's the risk that we get whipsawed next month by a very different jobs report?
Order submitted.
Yeah, John, this is certainly a very positive jobs report, a huge upside surprise, and I actually think it is possible that we can see the continuation of the trend that we saw this month. We can see that in June, and we can see it in July. I think some of the early hypotheses that we have about why this was such a constructive report, why it was an add versus a miss, is because there is a safety net that the government has put in place, like the Paycheck Protection Program, and they are seemingly starting to work. The economies are reopening, so it's not just the government push to bring the workers back, but there's also the actual need to do so. The reason why I think this may actually continue for the next month or two is because if you think about the timelines of when employers must hire the employees back, under the current construct, it's by the end of this month. But chances are that's going to get extended to, let's say, the end of July. So you probably have 2 months where the economies are coming back online, and you do actually have the need to bring those workers back. So that, I think, is the big silver lining here. That's the good news for the economy. It's good news for the markets. It's a good news for the reopening trade. But I do kind of put a timeline on this because as we think a little bit longer term and as we think about the second half of the year, it is far from certain that every job lost in the first half of the year is going to be put back online in the second half of the year. And the reason I say that is some of the shifts that we have seen are really here to stay. We're going to have to right-size our workforce for this post-COVID economy. And that likely means that some of the social distancing still stays in place. So it's going to take a while for restaurants and airlines and hotels to fully come back to their pre-COVID levels. That's on the one hand. And then on the other hand, anything that can be done online and more effectively is going to be done online. So whether it's grocery delivery, whether it's a portion of workers that are going to continue working from home, those trends are likely here to stay. And then if you think about some of the automation, AI, and robotics that are being put in place now to replace workers, these are all the reasons I say that we may not be looking at a single-digit unemployment rate for a little while longer.
So, Anastasia, what I hear from you there is basically you are reluctant to cash in your cyclical trades, which have done very well over the last couple of months, to fund more cyclical exposure. Is that a fair characterization of what you're saying?
I think the cyclical trade has more room to run. And one of the ways we'll look at it in terms of social distancing underperformers, so those are some of the consumer services and hotels, airlines, and so forth. And they've done remarkably well. Just looking at the numbers, quarter to date, they have outperformed the kind of work from home beneficiaries by almost 2 times rather. So I think there is more catching up to do because if I look at their performance since February, they're still lagging by 50% or so. So as long as we see, perhaps a continuation of the trend that we saw in the labor market today, as long as we see more and more states opening up to a greater extent, I think as people emerge from their digital lockdowns into the physical world, I think there's more to that trade. And what sort of gives me additional confidence in this is when I look at positioning. A lot of people have been caught off guard by the magnitude of this rally. And when you look at the market and you're trying to perhaps do a little bit of chasing, what do you actually chase here? Do you go to tech? Do you go to healthcare, which has done really well? Or do you go to some of the underperformers that are still in some cases down 50%? And I think it's the latter. So positioning in those cyclicals and value and underperformers and the laggard is still quite low. So I think as the upside market chase develops here, those are the places that are going to be lifted by it.
I just wonder if we're also giving birth to this assumption that we have this smooth global recovery, that each region tracks the same kind of pace as it comes out of this reopening. And I just wonder if that's a mistake. And I'll pose it in the following way from a market perspective. Would you rather own small cap exposure here in the United States and get exposure to the domestic economy here, or get deep cyclical exposure from the big caps trading over in Europe? What's the better trade at the moment for you, just in terms of the risk reward?
John, I do think that there's opportunities for both. I mean, what's happening in Europe with the fiscal push and the monetary push is obviously a game changer there. So we are looking at some of the international assets, and specifically European assets, as a catch-up trade. And I do kind of emphasize the trade nature of it, because I'm not sure that those are the exposures you want to own for the next year or two, but I do think that there's a catch-up trade here. Small caps have definitely been in the catch-up trade category as well. I do think there's more runway there, but perhaps the way I would think about adding to smaller and mid-cap companies, as you know, we think very much in terms of themes that are going to change and shape the world for the next several years. And a lot of those themes, those mega trends, are expressed by small mid-cap companies. So I would be a little bit more nuanced and a little bit more specific about what I would want to own in small cap. But those are the companies that are going to be giving you double-digit earnings growth in this environment.
Anastasia, appreciate your time this morning. My best to you and to the whole of the family. What a morning for the jobs market. A huge upside surprise in a market that rips higher, up 2 percentage points and change on the S&P 500. We advanced by 1.5% on the Nasdaq. Still to come, we'll be catching up with Mike Collins at PGM. I want to get back to the market desk and get you more insight, more clarity on what's happening beneath the hood. Let's bring in Abigail Doolittle.
John, sticking with the theme of the move into the cyclicals that we've seen more recently over the last couple of weeks, if we lift the hood just a little bit more and go subsector, this is where the huge rally is. Take a look at that. Unbelievable. Over the last 2 weeks, the airline index up 61%. That subsector, its low, really lagging the S&P 500 made on May 14th. Huge gains, catch-up trade there, and far more than some of the other cyclical subsectors, such as the banks, auto components, and the capital goods. Today is a big piece of the rally. If we take a look at American Airlines and some of the other big airlines, we're going to see big moves up on the day. American Airlines over the last 2 days up more than 80%. They, of course, have led the fundamental charge here, saying that they will boost their July flight schedule by 74%. Even though that's just 40% of last year, it's seen as a move in the right direction. Why? Because back in April, the load factor was just 15%. Barely anybody was flying. In May, it improved to 41% in the beginning of May, and then the end of May really boosting up to 55%. So folks are hoping that people are getting back on planes. They want in on this airline trade, John. Really remarkable, these massive numbers higher.
Abigail Doolittle, thank you. Thank you very much. What a morning we've got on the screens this morning off the back of a massive upside surprise on a payrolls report around about 10, 11 minutes into the session. Equities advancing big time. In the foreign exchange market, let's get a little bit exotic within G10. Aussie yen, that growth proxy against that haven currency. Aussie yen up for a 7th day and adding 6 percentage points and change to the rally through the week, over the week. Just a massive move higher, reflecting that improving risk appetite. From New York, next on the program, Mike Collins at PGM. This is Bloomberg.
Corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg commodity indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
13 minutes into the session here in New York City, we advanced by 2 percentage points on the S&P 500. Naturally, the underperformance coming from the Nasdaq, which has been seen as that defensive haven over the last few months during the shutdown. As we reopen and we get a monster upside surprise on a payrolls report, we advance in the more cyclical parts of the market. That move, building over the last couple of weeks, accelerates again this morning. The S&P 500 up by 65 points on the session. A little bit later this morning, in about 17 minutes' time, we will hear from the President of the United States in a news conference on this brilliant jobs report. Then a little bit later, we'll be catching up with Larry Kudlow, National Economic Council Director, right here on Bloomberg TV and on Bloomberg Radio as well. The scheduling just being pushed back just a little bit to accommodate that address from the President of the United States. I want to bring back in Michael McKee, who, just like all of us, was absolutely stunned 1 hour and 15 minutes ago. Mike, you have had 1 hour and 15 minutes to work out what on earth was behind that upside surprise and why on earth so many people missed it. What's the explanation?
Well, I think, John, a number of things come together. It's like an investigation of an airline crash. It's never just one thing. It's a lot of things that string together. The biggest impact seems to have been from the PPP program. Remember, there were a lot of problems around that, but most of the money got out the door in the end of April and the beginning of May. So the requirement was you spend 75% of that on bringing back your people onto payrolls. And that is what appears to have happened. A lot of people who had filed for unemployment and maybe got their first check, then went back onto their company's payroll. The question is, did they do any work? Because restaurants, things like that, still closed. And it raises the question of what happens next when that PPP money runs out. You also have to figure that a lot of people missed what was happening in the reopening states because those were so staggered and it was very hard to get any kind of data on what was happening. And so the models that economists used were probably off by quite a bit. And the third explanation would be the economy is just a little more resilient than we thought, and people were kept on payrolls, or companies did find something to do during that period. Again, this is 1 month. That doesn't make a trend, as they say. It would be good news if this continues, but we have to see whether or not this is artificially stimulated by government assistance or whether we're actually coming back right now.
Mike, just in terms of the next policy steps, if the collective will down in Washington was fading just a little bit over the last several weeks, how do you think things will pan out now off the back of a really impressive payrolls report?
Well, you've got to figure it's going to be much tougher to pass a stimulus bill because the president doesn't want one and Mitch McConnell, the Republican leader in the Senate, doesn't want one. However, McConnell has been talking about not visiting this issue until July. So we would have maybe the June payrolls report out by then, and we'll see if this kind of improvement continues. Even if we do get this kind of improvement, something to keep in mind is unemployment went down 1.4%. If that happened in June and that happened in July, we'd be at 10.5%. The high during the great financial crisis was 10%. So we still have extremely high unemployment, and we still have employment way below the levels we saw in February. A judgment will have to be made about how much additional stimulus we need to get back to where we were.
Michael McKee, on the latest on the economy and the labour market, still adjusting, reeling, lifting his jaw from that jobs report an hour and around about 16 minutes ago. Let's bring in Mike Collins of PGIM, shall we, to weigh in on this one. Mike, you've had the benefit of time on your side, sir. You've had a little bit of time to react to this one. Your initial reaction earlier this morning, Mike Collins, please.
Yeah, good morning, Jonathan. I think Mike McKee did a good job. I think I've mentioned on this program before, I'm involved in a local charity here in New Jersey. We employ, hundreds of people, and we applied for the PPP, received the money on, I think it was April 12th, which is right at the beginning of this measurement period for the jobs number, and we started hiring people back immediately, right? So I believe there is something to do with the PPP. You're seeing the southern states particularly open really quickly, right? Probably more quickly than some people are comfortable with, and more quickly than a lot of people would have expected. So I think a combination of all that is working, to really surprise the markets here and the numbers. But there could be some measurement things, right? I wouldn't be surprised, Jonathan, if, the next month or two, you just see big revisions one way or the other. So I'm taking this number with a grain of salt to some extent.
Mike, before we move on to the markets, just name the charity and what you guys do, just so we can help you out a little bit.
Yeah, it's called the CEA. We're in New Jersey. We help people with disabilities get jobs. And a lot of those people, you can imagine, work in places like supermarkets and restaurants, and so they're out of work now. So as they're starting to come back online, their training has to be updated, right, to get them ready to get back into the job market. So we're doing everything we can, and we're repurposing the facility. We have people coming in and cleaning and moving stuff around, putting in plexiglass. So those are jobs. And you think about the people at the supermarkets who are cleaning the carts, people standing in front of restaurants, counting people, right? So those are extra employees you need per customer that you didn't need before. So I think all this works to kind of distort the numbers.
Well, Mike, hopefully we get more improvement. I wish you the best with the charity. We all do. You're doing some fantastic work over in New Jersey, and we hope it continues. Let's reflect on this labour market then. We're looking at a move from 20% unemployment potentially, which we didn't get to, coming all the way down to 10. And I don't think we've quite figured out what a world looks like if we stop in the high single digits and the long slog starts there at the turn of the year. For a credit investor, that's the world you need to think about, of course, Mike. And I'm just wondering how it shapes your views on where you want exposure, the areas of the market that you want to be in.
Yeah, so as you know, we've been probably a little more constructive on this recovery than others. We had been adding credit risk to our bond portfolios starting in late March pretty aggressively. In retrospect, probably not as aggressively as I wish we had given the rally we've had. But, it was really based on, valuations were kind of almost at all-time cheap levels. We really thought this would be a short-lived depression, meaning it's not like a normal recession where you don't see the light at the end of the tunnel. Here or presumably have high conviction that in 18 months from now, or maybe even 12 months from now, we're going to be back, right? We'll have a therapeutic a cure. We'll have a vaccine. So that gave us a little more confidence. Obviously, the Fed's responsiveness, the liquidity coming into the markets just pushes off bankruptcy risk a little bit. So all those things, propelled us to add. And we had done it primarily in the safest, less exposed sectors. We weren't diving in and buying cruise lines and airlines and energy companies. It was the higher quality, more resilient business models that were even in some cases benefiting from this, right? You've seen a lot of businesses report, big growth in earnings because they're on the plus side of this as the economy shifts from losers to winners. Clearly, it's the higher beta names, it's the energy names, and the travel, leisure, hospitality credits in the stock market and the bond market that have performed the best here. And you do have to, I think, be careful going forward in some of those areas. For the first time yesterday, Jonathan, we're starting to scratch our head on valuations in certain parts of the market. I'm trying to wonder if maybe parts of the market have gone too far too fast here.
Yeah, Mike, it's interesting. That's probably the first time I've heard someone mention valuations the whole morning. It's almost like this is just momentum, position squeeze, look at the direction of travel and the rate of change, and plug in your capital wherever you see that cyclical exposure. It's interesting, Mike, and I just wonder from your conversations on a daily basis, how many people are actually talking about valuations?
Well, I mean, you're right. It's been a momentum trade. It's been a Fed and liquidity-driven trade. It's been a trade focused on the pace of the recovery, which, clearly now it's been faster than most people expected. But, we're looking in Europe where the ECB has always bought corporate bonds, and you see spreads, back into the 20s and 30s. Now, you've been talking about the short Amazon paper at 20 over, and those are bonds that we are not touching, right? There's just not enough value, but you could buy, 30-year bonds still at spreads of, 200 basis points that could tighten 100 basis points and give you still a lot of upside. So you have to be careful here, right? And And there are some parts of the market that have arguably gotten overheated. In some cases, it's interesting, Jonathan. It's the highest quality bonds. So people are doing what we're doing, right? They're emphasizing safety here because there is a lot of uncertainty about the pace and timing of this recovery. So a lot of those bonds now are starting to look more fully valued. So maybe that argues for even more of a rotation into the more cyclical, higher beta sectors, which is definitely taking hold every day here. So it is tough to fade.
And Mike, I wanted to finish on the Treasury market and the yield curve steepening that we've seen, the bear steepening that's come through the Treasury curve. Just reflecting that improving outlook, I think a lot of people just willing to let the long end go now and assume that the front end will be kept anchored by the Federal Reserve. 2s10s is wider by 7 basis points on the session. This interests me, Mike, because it's just a week away from the Fed meeting where yield curve control, we know, is going to become a bigger part of the conversation. What's the risk of assuming that the Fed will also just let the long end go?
Yeah, I mean, they have to issue a lot the Treasury Department has to issue a lot across the curve, including the back end. So you can see Trump already probably squirming at these higher levels of yields. I mean, the one thing the Fed hasn't fixed is the primary mortgage rate, the rate that you and I borrow money at to buy houses. And that has not compressed relative to Treasury yields. And now with that 10-year part of the Treasury curve backing up here, that kind of puts more pressure on that. So, there could be, maybe the Fed stepping up buying of mortgages to help that. There could be other regulatory things that help mortgage rates come down. But in and of itself, I don't know. I'm hard-pressed to think the Fed is going to jump out and aggressively buy 10-year Treasuries at 91 basis points here, or 30-year Treasuries at 173. That being said, they're finally now starting to flash value to us. One metric we look at, it's a little esoteric, Jonathan, but if you take the 10-year Treasury at 91 basis points and you say, what is priced in right now for that 10-year yield 10 years forward, so starting in 2030, and it's well over 2% now. So if you think like we do that the Fed funds rate is probably going to be between 0 and 1 or 1.5 for 10 years, a 10-year Treasury above 2, which is what's priced into the curve. That's not a guess. That's what the markets are pricing in. It's starting to look pretty high to us. So there is value starting to emerge back here. But again, from a momentum perspective, you're kind of stepping in front of the train right now.
Mike Collins of PG. Mike, we've got to continue that conversation about Treasuries another time. My best to the team. Great work over the last several months. In fact, over the last several years as well. 25 minutes into this session, equities up 2.3% on the S&P 500. Nice cyclical rally emerging over the last couple of weeks. Fueling that this morning, a really impressive jobs report. Let's strip this one back a little bit more. Get back to the market desk. Here is Abigail Dillittle.
John, it is truly risk on this morning. Sector-wise, it really reminds me of late March, early April when investors, traders wanted all in on stocks. Let's use the IMAP in the Bloomberg terminal and I'll show you what I'm talking about. First of all, you see all green. 10 of the 11 sectors are up by more than 1%, a bulk of them up by more than 3%, but you're talking about that cyclical trade. It's all about it this morning. Energy up more than 7%, in sympathy with oil's huge rally, up 4%. The financials up 4%. This is the 10-year yield is backing up, as you and Mike were just talking about, industrials, real estate. So it is all about the cyclical trade. That is the case on the week, too. If we take a look at what's happening on the week, we're going to see massive gains for energy, also for the financials and the industrials. Interesting, John, at one point the 10-year yield had backed up so much this week it was on pace for its biggest move up, or as bonds sold off, going all the way back to 1962 are on record. Something else to consider is the possibility of some sort of a new rotation, a rotation out of bonds into stocks. If that truly happens and takes hold, you could see this rally for stocks continue. Too early to say that for sure, but on the week, big numbers there, perhaps supporting that could happen, John.
Brilliant work through this morning and on the week as well. Abigail Dillittle, thank you very much. Equities advancing moments away. The President of the United States addressing the nation on a really impressive labour market report on the headline number. That's all coming up from New York. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Porque el día de mañana no sabemos dónde vamos a estar, o sea que una marca no nos va a estar sponsorizando ni pagando viajes toda la vida.
Es imposible. Es que, dime, habla.
No, que por ejemplo yo justamente cuando empezó todo esto del coronavirus, yo estaba en Los Ángeles porque tenía un viaje para un sponsor y tuve la suerte que estuve entrando con un mensaje, una leyenda del futurismo.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island.
Order canceled.
It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
Connection lost.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de...
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji that you'll use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for Mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
Order submitted.
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Order submitted. Order submitted. Order filled. Order canceled.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, let's say, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other. By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of
who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out, Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's energy independence executive order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something. It just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，都说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是比如初恋，初恋这种事儿多不靠谱。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似，就是说你们让我们看到了同志情侣之间的一些希望啊。我看到这样的留言，我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question?
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to copy that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there. Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand. Are you ready? Sure, I'm just hoping the connection's going to stay.
Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that good? It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
元々初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本やったと。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there.
Order submitted.
In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
Canceled. What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
To expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper. And I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
Yo llegaba como, no, tú me dijiste, me puse a comer de verdad y a entrenar de verdad, porque aquello, y tú entrabas a la Altamira y aquello estaba lleno de animales. Me acuerdo perfectamente de que yo era ahí un grupo, y yo llegaba, veía que era tan fuerte, y luego te ibas a comer en frente a ti de la
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. When you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me. And we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. You know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling,
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Lara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing in a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yep.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of...
Profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that, the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you. I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside.
Exactly. Which one do you sort of think? Which one do you fear most? I suppose. Different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, etc. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, this autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. This is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
It's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are, much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
Going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
You
a
had that
brand.
motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
Do you
everyone.
want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. I mean, that's
telling me.
just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that is this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved, but it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought, is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. Now, what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else did they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
Is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, it is a Friday edition. What a Friday it is. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you, and WOA, as Carol Masser might say, and as Cameron Kreis, our stocks columnist, said, his jaw on the floor this morning as we saw those jobs numbers and the ensuing market rally. We're going to get into all of that. Bloomberg anticipated this in some ways, but a lot of economists did not. Let's get into the numbers first and dig into it in a minute. Charlie Pellet, he's got a look at the trade.
I thank you very much, Jason Kelly. Finally, because there's a headline on the Bloomberg that says economists have the biggest whiff ever as the U.S. jobs report surprises. Fascinating report. Asks the question, how did economists bungle this one so badly? Here's where we stand in terms of numbers. S&P up 89, a gain there of 2.9%. Nasdaq up 214 right now. That is an advance of 2.2%. And after this morning's jobs shocker, the Dow up 928 points, up up 3.5%. In the year-to-date column, Nasdaq is now up by 9.5%. To put that in context, S&P is down by 0.9%. 10-year down 29 seconds. The yield there 0.92%. Gold down 1.9%. 16.81 the ounce. West Texas Intermediate crude surging 5.6% now, 39.50 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, let's jump right into it. The Business Week agenda, it is a robust one today, to say the least. Vincent Signorella here with us to give us some context. He is global macro strategist for Bloomberg, joining us on the phone from White Plains. And Dave Wilson, stocks editor for Bloomberg, joining us on the remote line from New Jersey. So, Dave, I guess give us the overview here, because we're still trying to wrap our heads around this market and its reaction.
Well, I mean, you're really seeing a broad-based advance, no question, and it's one being led by the more economically sensitive areas of the market. No surprise, because the jobs report certainly suggests that the economy is in better shape than a whole lot of economists had been thinking, and perhaps a whole lot of investors as well. I mean, you got energy stocks, by far the best performers on the day in the S&P 500. West Texas Intermediate, the benchmark U.S. crude, approaching $40 a barrel, which it hasn't seen for the last 3 months. Then you look, you see financial shares, industrial stocks, raw material producers, all 11 of the main industry groups in the S&P 500 up at least 1.7%.
Wow.
And in terms of individual shares, you only have 31 down in the S&P 500 right now.
So everybody's just all in, Dave, right?
It sure looks that way, and a whole lot of speculative buying, arguably, in the travel stocks. You look at how the airlines are doing. Cruise lines, you've got Carnival, Royal Caribbean, and Norwegian all up more than 20% in today's trading. I mean, that's quite the move for a group which has certainly seen a whole lot of those kinds of moves, mostly down this year.
So, Vince Signorella, come on in on the conversation. I'm just curious, on the macro squawk desk, what are the types of conversations? And I'm curious, when that jobs number crossed, was everybody like, what?
What exactly? What? I think Mike McKee made a really good point this morning when he said, and I think this is maybe very well the case, that PPP may have moved people from unemployed to employed, even if they weren't working, as they essentially were getting paid. It goes to the story that when you return to work, you're not supposed to get the PPP, so it's supposed to wash out. Right? The employer is supposed to report that you're working, and if you decide not to take the job back, the employer is supposed to report that you quit, so that you can't receive it. So that's the way things are supposed to smooth at the back end. I think the reality of the situation is you look at these numbers, and if you're bullish, you say this is amazing. The economy's roaring ahead a lot faster than we thought it was. And if you're bearish, you're looking at this and saying you just can't believe the numbers. On the latter, I would say about a 46% bounce off the low. I don't know a trader who'd still be working if they were still short from being down there. So you can't really fight the tape. You can't really fight the Fed.
Fight the tape, but can you, is there some point in your, logical side of the brain, I know we all have one, that you say, okay, this has been a nice bounce. Now let's see what kind of economic bounce we ultimately get. This is one data point.
It is one data point, excuse me, but I think this is what this is encouraging people, and then their expectations that the data points will continue. Now, it would be interesting to see the next jobs report next month to see whether there's any pullback from this. Have we borrowed from the following month?
Yeah.
Is this just a little bit of a bounce that we take back later? And then even if we have, it'll depend on how much. I think, I've talked to so many people who have missed this move. And even today, still hearing from people, you can't buy this, you can't buy this. And I'm like, how do you sell it? It may be irrational, but I think it's very, very, very much like 2009, where central banks are putting everything behind it, and you can't discount the fiscal stimulus. Nearly $3 trillion has been thrown at it. That is going to, at some point, provide economic growth.
In 2009, as we know, kicked off the longest bull run in history, if I've got my
Wasn't a bad time.
dates right.
Yeah, wasn't a bad time to step in.
Yeah,
Absolutely.
exactly.
All right, so Dave Wilson, give us a preview of your chart. How do you make sense of all this today?
Well, you look back at the history of moves like we've seen in the last couple months and try to figure out how stocks have done. And the short answer is they've done very well, thank you.
Yeah, amazing. All right, we're looking forward to that. Dave Wilson, he'll be back with us at 3:30 with his chart of the day, and just after the close for his stock of the day. Our thanks, of course, to Vincent Signorella, global macro strategist for Bloomberg. Vince contributes to the aforementioned Macro Squawk Desk. It's a real-time curated news service. It's audio streamed directly through your Bloomberg terminal. Check it out at Squawk.go on your launchpad. A lot coming up, Carol.
Yeah, a lot coming up, and I think safe to say you put it nicely on our planning call. You know, the surprise we got this morning really reinforcing the fact on maybe how we might look back specifically at this week, the seismic shifts that are happening in our society on so many different fronts. We've got some great go-to voices. Chris Liu, former Deputy Secretary of Labor under the Obama administration and Professor of Law at the Yale Law School. Bloomberg opinion contributor Stephen Carter, he's written several really smart, insightful columns about what's going on, some in the magazine and certainly some on the Bloomberg.
Right, renowned in many ways. Can't wait to catch up with him. And, of course, Chris Liu to talk not only, as you say, about these jobs numbers, but about the government right now, which we've been talking about the government in many different aspects today. Also, you know, really looking forward to catching up with our friend Michael Ainsley. He is the former chairman of Lehman Brothers. We mentioned 2009 a minute ago. He was there in 2009 and in 2008 when Lehman went out of business. He saw the financial crisis firsthand, and always good to get his perspective. He's a Southerner, and I think he'll have a lot of interesting things to say about where we are right now.
Yeah, we've been having a lot of conversations as a result of Michael Ainsley, Candace Lee, John Ingram that we talked to about a week ago, and so really pulling together kind of what's going on in our society and bringing that to our listeners. And then we've got, you know, we've been reaching, I feel like, Jason, out to the sports industry, obviously the business, financial industry, retail, you name it, to kind of understand our world over the past few months and certainly this past week. So we're going to wrap up with a 40-year veteran tour manager of the music industry and really talk to him about how music can help us heal. I mean, he has worked with the Stones, he's worked with Fleetwood Mac. Marty Haum's going to be with us, and so I'm looking forward to that conversation.
We were talking about Beatles versus Stones yesterday. I have a feeling where he would land on that. All right, that's all coming up. Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. Today's number is 2 billion. British drug maker AstraZeneca has doubled manufacturing capacity for its potential coronavirus vaccine to 2 billion doses and a handful of deals involving Microsoft billionaire Bill Gates that guarantee early supply to lower-income countries. The deals with Epidemic Response Group CEPI, and Vaccine Alliance Gavi are backed by the World Health Organization and aim to quell concerns that the company was committing all initial supplies of the vaccine to the developed world. This is a theme, Carol.
Yeah, absolutely. It's those big drug makers, and making sure that they've got enough and then spreading it around to the globe. So it's a big story. All right, lots to come over the next few hours. Right now, though, let's check in on world and national news headlines. For that, it's over to Nancy Lyons in our 99.1 studio in the nation's capital. Hi, Nancy.
Hey, Carol. President Trump is patting himself on the back after today's jobs report showing a surprise gain of millions of jobs and a 13% unemployment rate.
This is a very big day for our country. It's affirmation of all the work we've been doing really for 3.5 years. This isn't just over the last few months. This is for 3.5 years. And it's a great thing. We were very strong. We had the greatest economy in the history of our country. We had the greatest economy in the history of the world.
Trump says he expects the U.S. economy to recover from the coronavirus outbreak even faster than predicted, but he is warning that could stop if bad policy is put in place, warning against electing Democrats in November. Trump this afternoon is traveling to Maine, where he'll be meeting with fishermen and going to a plant that makes swabs for coronavirus tests. While his opponent, Joe Biden, says he is disturbed by the president crowing over the jobs report.
Donald Trump still doesn't get it. He's out there spiking the ball, completely oblivious to the tens of millions of people who are facing the greatest struggle of their lives.
Biden says black unemployment skyrocketed in May, and more than 20 million Americans are still out of work. He says he'll lay out his economic plan in the coming weeks. Tomorrow's anniversary observances for the D-Day landings in Normandy will be one of the loneliest ever. The coronavirus pandemic is keeping almost everyone away, including the frail veterans who might not get another chance to give their unlucky comrades a final farewell. Even tomorrow's weather forecast is bad. Global news 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You are listening to Bloomberg Business Week, and we know this to be true, Carol. There is rhetoric and there are data. And here at Bloomberg, we love data, and we count on it. We count on it to give us a clear picture of what's going on, and we're going to talk about this particular point. You heard Nancy mention it. We're going to talk about it more with Chris Liu. You got to go a few levels down to understand some of the mechanics of this labor market, and one thing is clear. The numbers don't lie. Black unemployment rate rising while white joblessness falls. This was a trend that those numbers were narrowing for a time. They are now widening, and it's a really important thing to understand, especially in light of everything that we've been seeing over the last 2 weeks.
Exactly, right. You want to see the trends improving, not getting worse. So the black unemployment rate, as you said, the highest in more than a decade in May. Here are the numbers: 16.8% rate for black Americans, topping that for white Americans, which ticked down to 12.4% last month. Highest rate, Jason, was among Latino workers, 70.6% of whom reported being unemployed. And, you know, I got to say, we've seen the difference between white workers and minorities. They swell during tough times. We saw it in the last recession, and we're seeing it once again. And, you know, this is a reminder that those already starting from a lower, you know, area, if you will, or position, you know, it's tougher for them to come back. And this is why we've really got to figure out some ways to improve access and, you know, access to really better paying jobs for everyone.
Well, one of the bylines in this story is our friend Katerina Saraiva. She wrote this story, but she also wrote a story earlier in the week. She was on this program, and if you missed that, check it out on our podcast feed, because she went through extensive amounts of data that really go to help us understand the economic underpinnings of all of this, and a lot of what we're seeing in terms of these protests and a lot of the anger that is out there. It all goes back to these structural issues. This is Bloomberg.
Order canceled.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A major rally underway to wrap up the trading week after this morning's shocker of a jobs report, way better than expected. S&P up 87 now at 31.99. That is a gain of 2.8%. The Dow up 881 points, up by 3.4%. Nasdaq up 205 now. That is a gain of 2.1%. 10-year down 29.30 seconds with a yield of 0.92%. Gold is down 2%, 16.79 the ounce. West Texas Intermediate crude oil surging 5.7%, 39.55 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you very much for that. Well, we definitely want to talk about the day's jobs news and also the week's news overall, the unrest across the country, what's been going on in the nation's capital with our next guest. We call him because he is a friend of our show. Joining us once again is Chris Liu, former Deputy Secretary of Labor under the Obama administration. He is a senior fellow at the University of Virginia Miller Center, and he joins us once again on the phone from Charlottesville, Virginia. Chris, we are delighted to have you back with us. I wish the backdrops were different, certainly when you think about the week, this past week. But let's start with what many are calling is the good news, and that is the labor front. How did you read the numbers? Because it certainly was a shocker for everyone. I mean, our survey of economists, we talked to a lot of them. Everybody got it wrong, certainly the trend line.
So, we've been doing these calls for, years together, and I got to tell you, this is one of the most head-scratching numbers I have seen because everyone was off. And it's also at odds with all of the other data we've seen, especially the weekly jobless claims. And so here's what I would probably say about this. It does suggest that the worst may be over. I would caution people about reading too much into this. When you kind of dig deep into the notes of the release, you see some potential red flags about the response rates in terms of collecting data. You see that some people may have been misclassified as employed when they really should have been unemployed. And so the actual rate is probably, unemployment rate, they say, is probably 3% higher, so about 16%. But unquestionably, and we'll obviously have to look at revisions down the road, but unquestionably it seems like the worst is over. Now, how quickly the bounce back, I think, is still left unclear at this point.
Yeah, I mean, I'm sitting. You can't see me, obviously, Chris. I continue to shake my head as everybody does. And it was interesting. I don't know if you heard it, but we even played like a little ad and promo, pulling some sound from our anchors who are not easily surprised this morning, sort of soaking all of this in. So, I mean, I guess as you do look at it with a much more studied eye than certainly I have, what does it say about policy moving forward if you're sitting in the administration right now? What do you do? What do you not do at this point?
So I would caution
Order
people
submitted.
about making taking premature victory laps and saying we don't need any more economic relief. What also may have happened here is the lowest hanging fruit, the easiest people to rehire got rehired. That next set of people will, I think, be much harder. I mean, we just simply look at like the announcements that come out from airlines and hotels and everything in travel and tourism and retail, and if you just add it up, it's thousands and thousands of layoffs, and those layoffs may be permanent layoffs. And so, again, I'm just sort of still not quite sure what to make of this, but my concern is that if we take our foot off the accelerator in terms of relief, whatever recovery we're experiencing will slow down. And we know that there's a next wave of layoffs coming, and that's state and local government employees. And if you want to find a dark spot in this report, it's the fact that 1.5 million government employees lost their jobs in the last 2 months. And we know that as states are trying to start their fiscal years on July 1, many of them are running billion-dollar deficits, and the only way they can close that is by laying off teachers and police and firefighters. And so I would push forward on more relief, whether it is extension of small business loans, whether it is enhanced unemployment, because I don't think we're out of the woods.
Well, and I do wonder too, Chris, how we slide back. Before we started talking with you, before this interview, we talked about what's going on with black unemployment. 16.8% rate for black Americans versus that moved up versus a rate ticking down for white Americans to 12.4%. The difference between the two rates once again swelling. We saw that in the last recession. I do wonder, especially against the backdrop of this past week, that if we're trying to lift people up, I do worry if the economic momentum is not there when we get on the other side of this, what happens to those that were already vulnerable?
Yeah, and that's a fantastic point. And it's not just the past week, but it's the past couple of months with the pandemic has exposed so many systemic racial inequities. And we know that when economic times are bad, African Americans, other communities of color are more likely to become unemployed. They have a harder time getting rehired. They also have less savings, and so they don't have as much of a cushion. And so we should, I think, shine a light on these numbers and the fact that they're going in the opposite direction as white unemployment numbers.
Yeah, I mean, what has been exposed structurally, I think we continue to marvel is the wrong word, but the data are just stunning as you look at all of it, and as you say, between the pandemic and then this most recent crisis, sort of forcing what I think we're continuing to call some very uncomfortable conversations around how long this has been going on and what the ramifications are of all these economic levers that either have been pulled or haven't been pulled, and where we go from here. Chris Liu is going to stick with us. We have a lot more to talk to him about, including the notion of the government's response to everything that we've seen. We've talked to him a little bit in the past couple months about what's been going on with the pandemic, but we also know that the government has had to respond to this crisis of civil and civic unrest, Carol, and I do wonder, especially given the economic underpinnings of, as we were just talking about with this, what he makes of all that.
Well, and I do wonder too, like he understands the government from being inside and how he sees it. Is this
all three branches? We should point out.
Exactly. It's a great point, Jason. And I do wonder, functioning or not functioning, how he sees it, because he has a really, really unique perspective. All right, folks, you are listening to Bloomberg Business Week on this Friday. We're going to continue our conversation with Chris Liu, former Deputy Secretary of Labor under the Obama administration, as Jason said, coming at us from having worked in all three branches of the government and now at the University of Virginia Miller Center. So much to come on this Friday, and this is Bloomberg Radio.
Order submitted. Order submitted. Order canceled.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with Chris Liu, a former member of the Obama administration, worked in the Labor Department at a very senior level, but also has worked across the government. We're going to talk to him about where we are, where we may be going when it comes to the government's response.
He's the son of immigrants, too, so I'm curious to see what he has to say about really our last week and the crisis that we're seeing, another crisis in our country. All right, let's get back to our top business stories, and let's get an update on that rally. Here is, once again, Charlie Pellet.
Hi, thank you very much, Carol Master. Happy Friday to you both. All about that job shocker this morning. Stocks are jumping, treasuries falling after a jobs report that far surpassed analyst forecasts, and that's bolstering expectations for the economy to rebound quickly from coronavirus lockdowns. downs. Let's get right to the numbers. That's the story today. S&P up 90, a gain of 2.9%. The Dow is surging 886 points, have been up more than 1,000. That is a gain of 3.4%. Nasdaq is up 221 points, higher by 2.3%. United Airlines going to be closing 3 international flight crew bases. According to a Reuters report, those closures will affect 850 flight attendants. Those are in Frankfurt, Hong Kong, and Tokyo. Dentists got back to work last month after the coronavirus forced many of them to close temporarily, accounting for the lion's share of job gains in the U.S. health industry. Meanwhile, the search for treatments continues at a rapid pace. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television and Radio.
There have been a few studies that have started using just antibodies as a therapy. So vaccines induce antibodies. Some companies have actually jumped to the fact of giving people those antibodies directly in terms of a treatment. And those studies are also moving forward and have shown some good promise initially.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. After earnings, Broadcom shares are rallying today. Ticker AVGO up by 4.4%. Gap after earnings up now by 1.4%. Wirecard's offices were searched today by German prosecutors as part of a probe involving the company's board members. The embattled company is attempting to rebuild its reputation after facing repeated allegations about its accounting methods raised in a series of articles by the Financial Times. Shares plunging now by 7.3%. Again, recapping, equities higher, the 10-year down 27.30 seconds.
Order
yield
canceled.
0.91%. We've got gold down 2%, 16.80 the ounce. West Texas Intermediate crude up 5.5% now, 39.43 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's get back to our conversation with Chris Liu, University of Virginia Miller Center, former member of the Obama administration, very senior level in the Labor Department. And Chris, you know, having worked, as we said, across all branches of the government, I do wonder what you make of the role that the government has played, not so much in the medical crisis, but in this social, cultural, political crisis that we find ourselves engulfed in over the past 2 weeks. It's so much pain, so much anger in many cases, and so many big questions being raised. What's the right role of government here?
Well, look, I was listening to Senator Cory Booker today, and he, I think, made an important point, which is that government can't change people's attitudes, but we can change how they act out in good or bad ways. And certainly what this has highlighted is with respect to the police, law enforcement's relationship to communities of color, that needs to be changed. And during the Obama administration, we convened a task force on 21st century policing. It had a 100-page report. It was worth reading. There were some great recommendations that were adopted by local police forces, and that needs to continue. But I think we also need to recognize more broadly, as we said in the earlier segment, there are so many systemic economic inequities that have been exposed, jobs, healthcare, education, that just need to be addressed. And, we in the United States right now are not particularly good at dealing with long-term problems. We can sort of rally together when there's a crisis moment, but then we kind of forget and lose interest again. So I hope this moment, to the extent something good comes out of it, leads to kind of an understanding that we need to do more from a policy perspective.
Right, because you know what we do? We create policy. We create a lot of laws. There's this great column by Bloomberg opinion columnist Stephen Carter, at Yale Law School, and he talks, Chris, specifically about having too many laws, and those are laws that police have to legally enforce. And just this whole idea that the fewer the laws, the fewer the interactions between citizen and enforcer. These are his words. And the fewer the interactions between citizen and enforcer, the fewer the occasions for the interaction to turn violent. And I do wonder if we've kind of overlawed society. I understand we have to have laws, but have we overdone it?
Yeah, no, I think it's an important point. I mean, when you look at local police departments that have adopted more of a community policing model, that have retrained their law enforcement, and that really kind of get to foster a relationship, they're able to withstand these kinds of crises in a way that other communities where there's so much more distrust between law enforcement and people aren't able to do. And I think that's exactly right. I mean, I think, look, we need to stop crime. We have laws we need to enforce, but we need to completely rethink that relationship right now.
And so, from a labor perspective, what's something that we can think about? I mean, setting the jobs number aside, but those structural problems, how do we chip away at them? And unfortunately, we only have a minute for you to solve this entire problem, Chris.
No pressure, Chris.
No, I think this is the problem. I mean, I think what we learned out of the Great Recession was, as I said, so many communities get left behind in a time of recession. They're the last one to recover. We're going to be digging out of this recession from years and years to come. We need to ensure that people not just get back to work, but get back to good jobs that allow them to raise families, send their kids to college, and buy homes. And again, it's job training, it's raising the minimum wage, it's better labor standards, and it's just better opportunities, because we need to understand that our economy is changing, and that means a different kind of workforce, that economy. So that's just not for African Americans, that's frankly for all workers.
Tall task, for sure. Really good to spend some time with you, as always. Chris Liu, he is our go-to voice. I look forward to talking with him every month, because whether it is a blockbuster number or a number that
order canceled
forces us to put our head in our hands, Carol, he always brings very relevant perspective and insights, and both historical and forward-looking, that I think we both appreciate.
And I think, Jason, like you rightfully pointed out, that he's worked in all branches of the government. He's now in academia, so he's seen the world from a lot of different perspectives and talked to a lot of people from those different walks of life. And I think, the broader that your perspective is, you can bring so much more to the conversation, which I think is what we need so much at this time. All right, let's get back to world and national news headlines. Lots going on, Nancy Lyons.
Yes, Carol, you are correct. Economists thought the unemployment rate in May could hit 20% or more, rivaling what was seen during the depths of the Depression. But today we learned the unemployment rate fell unexpectedly to 13.3%. And in the White House Rose Garden, President Trump sounded optimistic that the worst is over.
But I think we're going to have a very good upcoming few months. I think you're going to have a very good August, very good July, but a spectacular, maybe spectacular September, but a spectacular October, November, December, and next year is going to be one of the best years we've ever had economically.
Trump's political rival, Joe Biden, says he is disturbed to see the president crowing about the jobs report, especially since Biden says the numbers are still too high for communities of color.
Black employment went up this month. Latino employment jumped to over 37%. Hispanic unemployment overall is 4 times higher than it was before the president botched his response to the pandemic.
Biden says a president who takes no responsibility in costing millions and millions of Americans their jobs deserves no credit when a fraction of them return. Well, it's a video that's gone viral, and it's led to more police suspensions. It shows a Buffalo, New York police officer appearing to shove an elderly man who falls and cracks his head while police clear out protesters in a city square. The man is seen lifeless, blood coming out of his ear, but none of the officers are seen helping him. Buffalo's mayor says the police commissioner has suspended 2 officers without pay. The mayor says the 75-year-old man is in serious but stable condition. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. Bloomberg Business Time in the district.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar here with you. And, as we think about the way back from the economic crisis that we've undergone, we're still in the midst of, I think it's fair to say, housing is going to be a key part of this, and the rental markets, especially in big cities, they give us some clues about that, but the signals, it feels like, at least based on the reporting that I've seen, Carol, are sort of mixed, and it's hard to get your arms around exactly what it's going to be.
I agree, because we've had stories about people now going out to to the suburbs, and there's bidding wars. I have a niece who's trying to sell a house. She's got a bunch of offers and, trying to work all that out, and she's out in the suburbs. So it's interesting. This story, though, specifically by Dow Jones, Wall Street Journal, talks about a downtown Chicago rental. And what's interesting is that it looks like that they negotiated a 2-year lease, but they got a bit of a discount and 2 months free. So, yeah, I think the cities are finding a bit of an upheaval. I will say I think it's going to be I feel like the data isn't going to be very clear initially. I think data points are going to have to settle out to see whether or not people are truly leaving the cities. I don't know that that's ultimately going to happen longer term. We've had these discussions before.
Yeah, these stories are tough because you can find these sort of anecdotal pieces of evidence, and part of it depends on who the developer or the owner of the building is, what neighborhood it's in what particular city, and even the financial wherewithal of an individual tenant, where those people work, what they do for a living. It's just there's so many variables here.
Yeah, listen, just New York alone, new leases in Manhattan were down almost 71% in April compared with the year before. At the same time, New York rents appear to be increasing. Median rental prices on new leases are up almost 5% in Manhattan and almost, more than 14% in Brooklyn since last year. So, how do you make sense of that? I think we need to give it some time to see how it kind of sifts out.
Right. Well, and we don't know what the fall is going to look like, so there's a lot of time to come in this trend, that's for sure. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up Friday with the Dow, the S&P, and Nasdaq all rallying. Big gains for the S&P, up 91 points, close to session highs. Up right now by 2.94%. Best level of the day, the S&P have been up 99, up 3.2%. Nasdaq up 228, up 2.4%. The Dow is rallying 913, was up more than 1,000 points, up now by 3.5%. Stocks are jumping. Treasuries are falling after that jobs report that far surpassed analyst forecasts. That bolstered expectations for the economy to rebound quickly from coronavirus lockdowns. 10-year yield 0.90%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar and Jason Kelly. Well, professor of law and Yale Law School, professor of law, I should say, at Yale Law School, and Bloomberg opinion contributor Stephen Carter. He's writing for Bloomberg Business Week this week. It's a column you can find online on the terminal in the magazine. It's looking at the protests in the aftermath of the killing of George Floyd and comparing them to the civil rights movement and protests of the 1960s. It's a must-read. Jason and I have been talking about this and looking forward to this conversation. Stephen joining us on the phone from Connecticut, along with Bloomberg Business Week editor Joel Weber. And Joel, let's first get to you. Professor Carter's column, it fits into a politics takeover, section takeover on the protests in the magazine this week. Oh, we don't have Joel. Forgive me. Professor Carter, let me bring you in. We are delighted to have you with us. Tell us a little bit about the column that you wrote this week, because I do think, for those that do remember the protests, we're trying to make the comparisons. What's similar? What's different? What have we learned? What changes?
Well, first of all, thank you for having me. And this is a really important topic. A lot of people have been asking, is it different this time? Because we see protests a lot. We see waves of protests after various things happen in this country that I hope we all dearly, dearly love. But they always seem to peter out. And so people are wondering, does this signal some deep and fundamental change? And that's the same question people were asking in the 60s and 70s with the civil rights protests of the 60s and the anti-war protests of the early 70s that kind of rolled into each other. They were happening around the same time. And by the early 1970s, when you had literally tanks in the streets in Washington, D.C., people were wondering, was this a real uprising? Was it a real revolution? Was this different from all the other protests that we've seen? And people are asking the same question today. And that's what I was getting at, the similarities and differences between the two eras.
And so, you go through, part of what is so powerful about your column, Professor Carter, is, you list example after example after example that are very recent, and I do think that that's one of the things that's most troubling to us, and and I say that as someone who grew up in Atlanta and around there and know so much about the history of John Lewis and Andy Young and all of those people who did that very important work, and I have to think that people like that and candidly people like you look at this and just say, I can't believe this. So what do we
order cancel?
Let me be clear. I am not one of these people who says that nothing has changed in America. A lot of things have changed.
Sure.
It's a far better country than it was 50 years ago. I can remember when I was a kid on my way to school in Washington, D.C. during the 1968 riots after the death of the murder of Martin Luther King, that literally when I got to the corner where I was going to catch the bus in Washington, D.C. on Wisconsin Avenue, there were 3 National Guardsmen with carrying rifles standing at the bus stop looking at me, this black kid, very uneasily, although, of course, nothing obviously happened. We're a very different country now than we were then. One of the big differences, I think, is that in the 1960s, when people thought things were coming apart, that, of course, helped elect Richard Nixon, who ran as the guardian of law and order. It was key to his argument that liberals, in effect, the Democratic Party, in his rhetoric, was letting the country fall apart and letting all this happen. He would restore order, and that was largely what he ran on after the 1968 riots. And I think those riots really did help elect him, maybe made the difference in electing him in 1968. When he ran for re-election in 1972, the great gift that he got was the huge anti-war riots, because his popularity was flagging a bit, but the riots, the anti-war demonstrations lifted his popularity, and of course he ended up winning in a landslide. The difference today is that the simple appeal to law and order by politicians, say by President Trump, for example, isn't really enough. Of course, no one wants disorder in the streets. No one wants violence. No one wants rioting. No one's property destroyed. But simply saying that needs to stop isn't enough anymore. We're in a country now that wants to hear something other than we're going to make these people pay. This is a country that really is starting to care in a deep way about racial injustice, and politicians now, to succeed, are going to have to address that in very serious and, I would say, empathetic terms.
Our technology is working. Joel Weber is with us, Bloomberg Business Week editor of the magazine. And Joel, I feel like Professor Carter's column fits into, such an important part of the politics section takeover that looks at the protests.
Well, I have to say, Professor Carter, when you filed your draft, and I was reading it, and I've read other things you've written on qualified immunity, but then you round this corner, and I just thought it was amazingly eloquent, and it really was one of these pieces this week that I read it, and I've read so much, but this one was, I think, one of the ones that stuck with me the most, which was you round this corner and go, you can basically think about this through a lens of cops and all that, but there's laws that are being written that are telling the cops what to do. And, if we have too many laws, then obviously where we're going to see conflict, maybe that escalates. And in effect, we have too many laws on the books. And, I just thought that was just, as a citizen in this country, that was a take I had not heard from anybody. And I want to know from you, we as a society, how do we wrestle with that? How do we make fewer laws? Because that seems to be one of the things that we try and do every time we elect someone.
Well, I do think that we have too many laws, and it's not a liberal or conservative issue. Some years ago, the Congressional Research Service was asked to count how many federal laws there were, and they couldn't do it because there are so many federal statutes that basically allow administrative agencies to create crimes. We have legislators at both the state and local level who like to show how serious they are about something by turning it into a crime. But if you're going to have crimes, then you're going to have enforcement. And if you're going to have enforcement, a lot of enforcement, there are more and more flashpoints where terrible things can happen. And so people forget that when Eric Garner was killed by New York City police in 2014, which sparked the beginning of these years that we've had of protests and fury in the African community, my community, about police killings. When Eric Garner was killed, the crime for which they were trying to arrest him was selling loosies, that is, individual untaxed cigarettes. And and that law was being enforced because business owners had complained, and politicians had then ordered the police to crack down on this issue. But for that crackdown, he would still be alive. But the crackdown was the issue of whether you can sell cigarettes individually untaxed or not, which does not seem to me to be the sort of thing in which the state should invest a lot of violent enforcement effort.
Well, it's just an amazing look, and we're so delighted to have you here. We hope you will come back, Professor Carter, because as Joel is, I'm a huge, long-time fan of yours. I've read so much of your work and really admire everything you're saying.
And I'm just going to say there's two columns that we were talking about. And I'll put them both out on Twitter. One is in the magazine about the wrong reach of the law, which is what Joel was addressing. And then there was what we initially kicked off about talking about what's going on today versus the 60s protests. So our thanks to Stephen Carter and to Joel Weber right here on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading with the Dow, the S&P, and Nasdaq all surging. The big question at 3 o'clock Wall Street time, is this rally going to stay right through the closing bell? Only way to get the answer, stay with Bloomberg. We'll keep you up to date. Here's where we stand. S&P up now by 84 points off our session highs, but still a gain of 2.7%. Best level of the day. The S&P had been up by 3.2%. The Dow's rallying 853, up 3.2%. Nasdaq is up 208. That's a gain of 2.2%. Stocks are jumping. Treasuries are falling after that jobs report far surpassed analyst forecasts, bolstering expectations for the economy to rebound quickly from coronavirus lockdowns. Tiffany Wilding is chief U.S. economist at PIMCO, and on Bloomberg Television this morning, she reacted to the report.
I think one thing that that does come out of this is that some of the things that the programs that the government has implemented, like the payroll protection program, maybe those things are working a lot better than we thought. So that program actually incentivizes businesses to rehire back people, so they can get loans from the government that ultimately will become grants. So I think this report suggests that those kinds of policies maybe are much more impactful than maybe many people thought.
Travel stocks among the day's biggest winners, specifically cruise line stocks. Right now, Carnival Corp up 19.1%. Norwegian Cruise Line Holdings up 17.3%. Royal Caribbean is up by 24.9%. Reddit co-founder Alexis Ohanian says he has resigned from his position on the company's board and is urging his spot be filled with a black candidate. He says he will pledge $1 million to Know Your Rights Group, a nonprofit founded by Colin Kaepernick, and will use future gains of his Reddit stock to serve the black community. Recapping,
Order
equities
submitted.
higher across the board. The 10-year down 24.30 seconds with a yield of 0.90%. Gold down 1.9%, 16.82 the ounce. Crude now surging 5.3% to $39.40 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics here. The economic story of the day, it's clear. It's the jobs report. And as I said at the top of the show, quoting my esteemed co-host, Carol Masser, WOA. I mean, there's no other way. It's like double WOA or like WOA to the infinity. I don't know exactly how you would characterize it, Carol.
Yeah, exactly.
But we want to make some sense
Infinity
of
and beyond.
it. Exactly. With Yelena Shalecheva, senior U.S. economist for Bloomberg Economics. All right, Yelena, we were all blown away by this number. What happened?
Blown away, probably. It was better than expected on many fronts, not just the headline payrolls number. It includes a decline in the unemployment rate, a significant rebound in the diffusion index, which reflects the breadth of industries hiring, but it's by no means the time for a victory lap. I think that, instead, the latest statistics highlight the importance of a timely and sizable policy response and the need for additional fiscal measures in the second half of the year, probably, again, directly aiming at supporting the labor market. So I think that this report is a clear example that policymakers did make a difference. They responded in a timely and an aggressive way, both the fiscal authorities and monetary policy authorities, and that's what's required going forward. The economic fundamentals are not anywhere near the levels that prevailed before the crisis, and unfortunately, the economic recovery is unlikely to continue by itself. I think it still requires some support from policymakers.
So are you saying that, okay, wait, so the trend line's getting better, but unless we continue to get relief, it's not going to stay that way?
Correct.
Okay.
If you look at the wage income growth, the level of wages actually in the economy, it was a tremendous, a huge decline in that level since the crisis started. And wages never got back to the level where they were before the crisis. So So in order to compensate for that gap between the previous trend and the current level of wages, the economy still requires some support in the way of jobless benefits, PPP programs, and such. So I think that is an important message to policymakers, that they did something right, but they need to do more.
So what do we look at next, Yelena, to get a sense of how much of this was, to use a technical term, just a little funky, and what do we see that would bolster the case and lead to someone taking a victory lap? Like, what else do we need to see to give us confidence here?
I think, Jason, you put it exactly right. So we cannot be confident just simply because of one good jobs report. We need to look at the different measures, including jobless claims, which basically are telling us that things are not as rosy as the payrolls report is suggesting. And we need to look at other measures of the labor market, and particularly we need to look at the pace of income growth and wage growth. So until we see that is on a very strong upward trajectory, I wouldn't be, saying, okay, that the crisis is over and everything is great again.
All right, so economist. Do you think economists in general are going to have a better time calling the June jobs report? And you know we love you, but I'm just trying to understand, because, right, they got it so wrong.
Okay, well, I think everybody was really surprised by that number. And, it was very much an objective thing to expect another decline based on the data available. So we don't really make up the numbers. We look at different indicators, including jobless claims, and they were suggesting a decline. I think the positive numbers can continue in June and perhaps in July, but let's see what happens after all these augmented measures of support in the labor market expire, and whether we'll get another stimulus package.
Yeah.
So what happens then, and whether aggregate demand will be strong enough to support further growth in the labor market.
Yelena, what kind of visibility do you feel like you have right now? I mean, truthfully, like, is it the next couple of weeks, the next month, the next few months?
In terms of what to expect for the economy, or
yeah, just statistics in general. The economy certainly key, and of course the labor market.
I think we will continue to get a lot of different signals, and we will get some rebound in terms of sentiment measures, simply because they were at the very bottom. But some, rebound is necessary given the economy is reopening. I think that we will get a terrible GDP report that will show a huge decline in terms of GDP growth, and I will stick to our forecast of negative 37% in terms of GDP growth in the second quarter.
Oh my God! Wait! Just say that again. Negative 30, so down 37%.
Yeah, and that is an annualized quarterly number. So I think that today's report confirmed this forecast, because aggregate hours worked declined by more than that. They declined by 46% annualized based on the 2 months of data for the second quarter. The question is about how big of a recovery we will see in the second half of the year.
Well, let's see if the economy bounces back like the stock market, right?
Yeah, if only. All right, Yelena Shalecheva, thank you so much. Have a great weekend. Always appreciate catching up with you, senior U.S. economist for Bloomberg Economics. Coming up, we're going to check in on the virus, the response there on the eve of New York City starting to reopen. Our go-to doc, Les Bader, is going to be with us. First, let's head down to Washington. Nancy Lyons for World and National News.
Thanks, Jason. President Trump calls it the greatest comeback in American history. Today's positive jobs report shows the unemployment rate fell to 13.3% in May. The economy actually added 2.5 million jobs. But despite the progress, Trump still wants Congress to pass more economic stimulus.
We're going to be asking for a payroll tax cut. We'll be asking for additional stimulus money because once we get this going, it'll be far bigger and far better than we've ever seen in this country.
Trump says the only thing that can slow the economy down is left-wing bad policy, of course, a strike against Democrats. Well, his rival this November, Joe Biden, says he's glad to see some jobs coming back, but he does offer a caveat.
I was disturbed, however, to see the president crowing this morning, basically hanging a mission accomplished banner out there, when there's so much more work to be done. So many Americans are still hurting. More than 20 million Americans, 1 out of every 7 U.S. workers, is still out of work.
Biden says the depth of the overall job crisis is not attributable to an act of God, but to the failure of a president. He says he'll release an economic recovery plan in the coming weeks. The UN's atomic watchdog agency says Iran has continued to increase its stockpiles of enriched uranium and remains in violation of its deal with world powers. The International Atomic Energy Agency says Iran's total stockpile of low-enriched uranium now amounts to 1.73 tons. That's up from 1.1 tons in February. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
So, Jason Kelly,
Yes.
You can build them, you can open the doors, but will they come?
I know. I mean, it really is one of the big questions. And, we were just talking about New York City, planning to reopen slowly starting Monday. I'm looking forward to a lot of the coverage that we're going to be doing around that across the Bloomberg newsroom. We've got a whole team set to really document that. I think it's going to be fascinating to see because in other parts of the country which have reopened, and especially these places where lots and lots of people gather, you're not seeing a whole lot of enthusiasm and witness Universal Studios and Islands of Adventure down in Florida.
That's right. So they opened their doors, and that was today, right? The reopening, and just a few guests coming in. They had pretty soft traffic, which, according to our reporting, Chris Palmieri putting a good story out on the Bloomberg. It's just showing, first of all, most of the time people travel to Florida, right, to go to the big theme parks, and so people are probably still not traveling, and they're still reluctant to do that. And it's that whole idea of, do I want to be in a crowd? My daughter and I were out walking the dog last night and talking about all the protests, and we're saying it'll be really telling what happens in a couple weeks from now, because these are huge crowds of people together, a lot of them wearing masks, but very close to one another. And I am curious to see if we get another wave. If we don't, maybe that tells us something about kind of where we are in this fight.
Yeah, I think that's totally true. And, these lagging indicators are something that we're going to have to pay very close attention to because of that 2 weeks that it's going to give us a sense of. We'll see. It'll be interesting to contrast this when Disney reopens, which is mid next month. I believe July 11th is the date that they have set. They're in Orlando.
I think they're watching Universal to see what's going to, right?
Hundo Pig.
But listen, if you go, the wait times for Dr. Doom's Fearfall and the Incredible Hulk coaster at Islands of Adventure, it's just a few minutes.
Yeah, I mean, those are your go-to jams. Absolutely. This is perfect.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is an update. That's putting it mildly. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are surging today after that better-than-expected jobs number. Dow's currently up 770 points. S&P's gained 77. Nasdaq climbs by 188. The U.S. 10-year yield spiked to 0.9%. WTI crude futures are up 5%. Gold is down 31 points, and transports jumped 300 points amid a surge in the airlines. Leaders to the upside in the Dow, Boeing and ExxonMobil. Only Walmart and Pfizer fell. In deal news, CNBC reported that Grubhub received interest from Just Eat and Delivery Hero, and they also reported that LVMH is still focused on price cuts for the Tiffany deal. Wrapping things up, Trump says he will be asking for a payroll tax cut as well as more stimulus. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, let's turn to one of our go-to voices. Really has been our go-to voice on the virus, I have to say. We're so grateful to him because he has been, as we've said, on our air before, really on the front lines of this here in the New York City area. We're talking about Dr. Ian Lustbader over at NYU Langone's Medical Center. Ian, great to have you back with us.
Always a pleasure. Thanks, Jason. Hope you are well. Hope Carol is well.
We're doing okay. We're doing okay. It's been quite a week, as we know it has been for you. A heavy week, to say the least. As we look ahead to next week, though, it's going to be a very important day in New York City, where you are, because we're going to start to see the beginning of reopening. This is, the last region of our state, which is a big one, to start to reopen a little bit. What do we need to be thinking about as that happens, Ian?
Well, I think this is unknown territory. This has been certainly a busy week for, as every week has been for COVID-19 and SARS-CoV-2. Evidence on some studies that we had talked about hydroxychloroquine and certain susceptibilities. Some groups may be more susceptible. But and we can talk about that later, but when it comes to talking about returning to work, I think we can only do what we can do, namely do our best with social distancing. It's hard to imagine getting people in crowded restaurants or cubicles in offices. But I think eventually that has to happen even as more people work from home, and I think that will kind of slow the exposure. But I think there's a lot of evidence that masks seem to work very well. Not perfectly. We know those viral particles are tiny. The N95 masks would be ideal. Still a bit of a shortage on those, but if more people had those available, I think there'd be a lot more reassurance. They are a bit uncomfortable, certainly a little less airflow than the regular surgical mask, probably a little more effective as well. But I think we need to do the experiment. I think we need to get people back. Certainly we're seeing big crowds and demonstrations, and there's a big concern about perhaps, an earlier second wave of the virus.
Yeah, I do feel like that's going to be, I do feel like, Ian, that's going to be pretty telling, 2 weeks from now, whether or not we see another wave or an outbreak.
Exactly. We certainly see in the hospitals that the number of new cases are dropping dramatically. Patients are beginning to come back with non-COVID, heart disease and liver disease, and et cetera. We're certainly seeing that in the office as well.
Is it just that because people have been good about staying home, social distancing, wearing masks, that the virus is not finding any place to go?
Very good question. Two questions really. One is why are the number of cases dropping? And I certainly think the social distancing and a little bit of herd immunity is beginning to take some effect on that. Viruses often do diminish over time. The curves certainly the warmer weather may play a role. We're going to have to find out in a few weeks exactly as you say. When you've got big crowds marching together, breathing heavily, a lot of people are exposed even if they're wearing masks. We'll have to see if there really is a second wave that comes earlier than what we thought might happen in the fall. And if that's the case, that will certainly make people a lot more careful, I think.
And Ian, from a therapeutic and vaccine and general sort of medical perspective, what's the most important thing that you've learned this week? You know, you mentioned the hydroxychloroquine, that whole thing seems to have abated to some extent. We're still, very optimistic about a vaccine, but between vaccine and therapeutic, what's the most important thing, and antibodies for that matter, what's the most important thing we need to know?
Important questions. So a lot of studies are really underway right as we speak. They include vaccine studies at a number of major medical centers. There are approximately 100 companies doing vaccine development, and they vary from the messenger RNA that we talked about with Moderna, as well as adenovirus, and a whole host of different platforms to get antibodies. We do think many, not all viruses, when you form antibodies, seem to be protective. We're hoping that's the case. There are studies with convalescent serum that we're talking about, which hopefully will be much more effective. So I think we have a little better approach for people who are hospitalized.
Right.
And I think we still need more studies and really randomized, good controlled studies for something like hydroxychloroquine, if not that, something similar, that might reduce the severity of the infection. Two studies that came out in the New England Journal and Lancet seem to have to be retracted because the database was in question and sort of the whole methodology. So I think it's very important that we don't rush to judgment, but really do what science does best, which is randomized controlled studies, even if it takes a little longer, to give doctors and nurses, the staff, the information to say what seems to be the best, and we don't really have that yet.
Right. All right. Well, we count on you, as always, to keep us honest on this and look forward to catching up in the not-too-distant future, especially as New York City does start to open, because, as we've said, we know you'll be there on the front lines to give us an honest opinion of what's happening. Dr. Ian Lustbader from NYU Langone's Medical Center. Carol?
All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio. Coming up next, we're going to continue watching the markets. Of course, got about half an hour left in the trading day. We'll get to the chart of the day, and of course, we'll count you down to the closing bell on this Friday. Wrap up that trading week. This is Bloomberg Radio.
Order submitted.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to get the Friday edition of Dave Wilson's Chart of the Day. I think inspired by some of what we've seen going on in the markets because it's WOA.
WOA is right. I did finally look at my 401k. WOA.
Yeah, WOA.
Like you just get an idea of the bounce back, the fall, and then the bounce back. All right, let's first get back to your top business stories, and let's get a little bit more on that rally today. Hey, Charlie Pellet.
Well, hello there. Dave Wilson's song better be up, and away today because that's what's going on with the stock market. The Dow, the S&P, Nasdaq all surging. Do want to begin with a story out of the airline industry. Delta says it is suspending operations in 11 U.S. markets beginning July 8th, while customer volume is significantly reduced to help lower costs as the company is trying to mitigate the crisis caused by the COVID-19 virus. Delta's suspension of operations makes up about 5% of its domestic airport service. Delta shares, along with almost everybody else in the group today, surging by 5.3%. The reason I hesitate there, Southwest had just turned negative, but UAL, American Delta, all pushing higher. Stocks are jumping. Treasuries falling after a jobs report that far surpassed analyst forecasts, bolstered expectations for the economy to rebound quickly from coronavirus lockdowns. S&P up 86, up 2.8%. The Dow advancing 854 points, up 3.2%. Nasdaq up 216. That is a gain of 2.2%. 10 years down 22 30 seconds with a yield of 0.89%.
Order submitted.
Gold down 1.9%,
Order submitted.
16.62 the ounce.
Order submitted.
And crude West Texas Intermediate surging 5.2%, 39.35 a barrel. After earnings, Broadcom shares are pushing higher today, up by 3.6%. Gap
Order
reported
canceled.
last night. Its shares up now by 1.8%. It is 3:33 on Wall Street. Time now for the Small Business Report, and here's John Tucker.
Bungalow Road is a gift shop with 3 locations at the Jersey Shore. They closed their doors when the coronavirus hit New Jersey. That was even before stay-at-home orders went into effect. Bridget Duffy is co-owner of the establishment. Bridget, tell us about the business. What sort of hit it's taken from the lockdown?
So mostly as a gift store, we are, a little cyclical and seasonal. That right now we're probably doing 10% of the business that we would normally be doing this time of the year. And that's kind of been the case since the pandemic started.
How did you pivot during the pandemic? Were you doing online sales or online purchases and then curbside pickup?
Yes, so we were doing Instagram, Facebook, things like that. We had a website that we had kind of like let go stagnant. And then when this started, we relaunched it again. Our store is really more about, we think, like the in-store experience. We gift wrap everything. We know a lot of the customers, and we also know the people that they're shopping for. So it's really like a, more of an experience. So it didn't always translate that well to online shopping.
Has anybody given you any clear indication of when the doors might reopen?
No, I feel like that is probably one of the things that is weighing on us the most, is that we don't have a timeline. Our stores, have a pretty small amount of people in them at one time. We usually only staff one person at a time, and there's probably at most maybe 3 shoppers at a time. So we don't really have a high capacity. So we're hoping that they can approve us to open for in-store shopping again soon.
Bridget Duffy, co-owner of Bungalow Road, 3 locations on the Jersey Shore. Thanks for talking with us. I'm John Tucker. That's the Bloomberg Small Business Report.
And we thank you, John Tucker. Again, recapping here, 25 minutes to go with the S&P up 83, up 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
Is this Shirley Bassey? Is it? It sounds
Dame
like
Shirley Bassey, absolutely, Carol.
Wow,
You
Carol.
you can hear the tone in her voice, right? I
Yeah.
was
Right.
thinking of
Goldfinger.
Totally.
There you go. Wow.
But you'll never get the band.
Oh.
God, come on, Dave
Dave,
Wilson.
just
give
give
me
it
a
to her.
little. It's Friday. It's National Donut Day. Just give me something.
It's been a tough week.
God.
Who is it,
Okay,
Dave?
you can have a Krispy Kreme glazed on me. But that's
Hey.
another
That would
story
be
altogether.
Okay, so who's the band?
This was sort of a one-hit wonder. The band is called the Propeller Heads, and the song is "History Repeating," which seemed particularly
Wait, the band is
appropriate.
called the Propeller Heads?
Correct.
That's amazing.
Do they
one of these sort of
do they wear like
oddball
little hats with
collaborations.
propellers? Is this like a Devo version of like a band in the '60s with like little propeller hats?
Let me just talk about the chart, okay? I don't want to think about propellers at this point, although
Well,
when you
we're
talk
all
about what's going on with stocks, it certainly seems like they have propellers
We're all
moving
Googling
them higher.
images. I'm just going to tell you, we're all Googling right now, but go ahead. What's the
Go
chart?
right ahead, indeed. That's what I'll do. You know, we had the biggest 50-day gain in the S&P 500 ever.
Order canceled.
In the 50 days that ended Wednesday. So basically from the March lows through this week. And when I say ever, I'm talking about, since the S&P 500 actually became a 500 stock index back in 1957. So the question is, after a move like that, what's next? It's a question that Ryan Dietrich evidently asked himself. He's a senior market strategist over at LPL Financial. And he's quite the number cruncher, so he ran the numbers, and I kind of backed them up on the Bloomberg terminal just to get an idea of how stocks perform after those kinds of gains. And sure enough, there have been really 7 periods where you've seen the S&P 500 rise 20% or more over 50 days. And if you take sort of the peak from each of those periods between 1975 and 2009, you find out that every time the S&P 500 rose in the next 12 months, and the average gain was 17%. So it basically tells you that, sure, we had a big move, but if history's any guide, that doesn't mean stocks are going to stop here. They may very well keep going as they have today. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I'm a little disappointed. The propeller heads aren't like wacky like Devo. I was expecting something more. They look pretty normal. Hey, Dave, I did a poll on Twitter, Beatles or Stones?
I saw that.
What do you think?
I think the Beatles probably won.
Yeah, and they were way ahead, and just by today, it's been running, I don't know, a day and a half now, or I guess about a day. 59% the Beatles, 41% the Rolling Stones.
Oh, so the Stones made a little bit of a run there at the end.
But
there was some
initially,
like
it
Reddit
was
forum that got a hold of that.
What?
There's some Reddit forum that got a hold of that. Said voted Carol Masser's poll. Don't let Mick down.
Exactly. Maybe Mick's been voting. Wouldn't that be so cool?
Just voting over and over again. Who's this Carol Massar?
Yeah, exactly.
Why is she asking this question?
What is this? Who is this?
Who's this lady?
Dave Wilson, thank you for always getting all of this crazy stuff started. Have a good weekend. We'll see you later, though. Stock of the day.
All right. Let's get some world and national headlines now. Nancy Lyons has those.
Thanks, Jason. President Trump and his political rival Joe Biden have very different reactions to today's better-than-expected May jobs report.
Today is probably, if you think of it, the greatest comeback in American history. But it's not going to stop here. It's going to keep going.
The president, who takes no responsibility for costing millions and millions of Americans their jobs, deserves no credit when a fraction of them return.
Non-farm payrolls actually added 2.5 million jobs. The unemployment rate fell to 13.3%, when many economists were fearing a 20% rate. Well, Donald Trump's former chief of staff, John Kelly, says he agrees with former Defense Secretary Jim Mattis and his criticism of the president's hostility toward protests against police brutality.
He's quite a man, General Jim Mattis, and for him to do that tells you where he is relative to the concern he has for our country.
Kelly was speaking with Anthony Scaramucci, the president's former communications director. New York Governor Andrew Cuomo says he has spoken to the 75-year-old man who was seen in a viral video being pushed by police officers during a Buffalo protest. 2 officers pushed the man, caused him to fall back and hit his head. He appeared motionless as the officers left him on the ground.
You see that video, and it disturbs your basic sense of decency and humanity. Why? Why? Why was that necessary? Where was the threat?
The two officers have been suspended without pay. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. And, you know, among the stocks that are soaring, see what I did there today, are the travel-related stocks, and especially the airlines. It's so lame. Although what's interesting is I just saw a headline cross the Bloomberg, and you probably saw it too. I think it got a read spike that Delta is actually suspending operations in 11 markets. Now, it's only about 5% of their traffic that's represented there, and I didn't see anything that had the markets listed, but there is, even though there's a rebound, and that's what accounts for American airline stock being up as much as it was yesterday and again today. Demand is still off significantly. We talked a little bit about this yesterday.
All right, so here's a little bit more context on that Delta story to help lower costs amid the COVID-19 crisis. So as you said, 5% of its domestic airport services, Aspen, Bangor, Maine, Erie, Pennsylvania, these aren't big markets.
Yeah,
so
they're Aspen, though. It's a nice flight to Aspen, I have to say. Flying right in there and being able to get off the slopes, I'm not going to lie, it's pretty great.
Live like Jason Kelly. So anyway, but yeah, American.
But, when I land on my Delta flight and I see all the private jets lined up, I'm like,
you know what?
Could be better.
You open the door, buddy.
Right.
But American Airlines, right, surging the most on record after they said they would
Order
boost
canceled.
Flights 74%. Keep in mind, it's coming from no activity.
Yeah, it's
so,
down 60% from last year.
So that's why
still,
you're seeing big percentage jumps.
Yeah.
But nonetheless,
it's just math.
It's just math. But it is a sign that people, are willing to, maybe venture out. And again, I think it depends where you're coming from, right? I think it's going to be slower.
Totally.
In New York
and I think it's going to be a lot of domestic and not a lot of international. So we'll see how that trends. I do think, August will be interesting. September will be interesting, too, to see if there's any business travel that comes back.
Yeah.
That's going to be a key indicator because we know that really fuels a big part of the travel economy. You're listening to Bloomberg Business Week.
Order submitted.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks pairing gains, but still a big up day on Wall Street with the S&P up 72 now, up 2.3%, have been up 3.2%. The Dow, which had been up more than 1,000 points, now up by 765. That is a gain of 2.9%. Nasdaq up 172, up by 1.8%. The catalyst for all of this, that shocker of a jobs report this morning that came in far better than expected. 10-year down 19/30 seconds, yield now 0.88%. Gold down 1.8%, 16.83 the ounce, and a surge in West Texas Intermediate crude today up 5.2%, 39.35 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the
Order
drive
canceled.
to the close. So delighted to have back with us Randy Watts. It's a great week to have him any week, but especially with the moves that we've seen in the markets. He's Chief Investment Strategist at O'Neill Global Advisors. He's on the phone in Miami. Randy, it is good to have you back with us. I hope you're continuing to do okay.
We are, and I hope everyone in New York is safe as well. It's great to talk to you, Carol.
Yeah, we're getting by, that's for sure. I got to ask you about the markets this week. It's a pretty substantial rally again. We're now up about 43% from the lows on the S&P 500. In many ways, we were, regaining ground that was lost after the sell-off and the shutdown of the economy. What do you make about over the moves? What are the charts telling you?
Well, technically, the market has had a really, really big move. We had shifted the market back into uptrend back on April 2nd around 2,500. Clearly, if you look at the S&P, it's a little extended right here. Resistance should function around 3214, which is that February 2020 level. I think what we would like to see from here is for the indices to either consolidate or maybe even have a little bit of a small pullback. But with regards to the S&P, we'd really like to see it stay above its 200-day average, which right now is around 3,022.
And so, as you look across the world, it is a complicated one, to say the least, Randy. And I'm also, to take a little bit of a turn here, I'm intrigued to get your opinion in part because, if I remember correctly, you were an American Studies major. I mean, you understand history really, really well, and I know you apply that to your work looking at the market. I do wonder what you make of a market at a time of unbelievable unrest in the country, the political unrest, and then this backdrop of a market that goes up and up and up. And I think we're all trying to get our heads around it.
Especially, when we've had such a run-up, Randy, it's like the disconnect between Wall Street and what's going on in Main Street America.
So I think a couple of things. I think hopefully what the market is sensing is that if we look out, 5 or 10 years, we're going to be a much better place, both in terms of equality, both racially and hopefully also economically. Obviously, the gap between the richest and the poorest Americans is something we need to